If you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
To expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl? Superwoman.
I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
it was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
And I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
McKee is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in the laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? So is no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from produce. 2, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Stocks are declining as a sell-off in tech shares deepens. Right now, we have got NASDAQ down 196 points, down 1.2%. The S&P 500 index down 12, drop there of 0.3%. But the Dow now rallying 96 points, up 0.3%. 10-year yield 1.65%. The S&P lower for a third day. Gains in energy and financial stocks buttressing the decline. West Texas Intermediate crude surging 2.6% now, up $2 a barrel to $78.74. Spot gold down 0.9%, $17.88 the ounce, and Bitcoin is up 2.2%, 57,538 on Bitcoin. The U.S. will be releasing 50 million barrels of crude from its strategic reserves in concert with China, Japan, India, South Korea, and the U.K. An unprecedented, coordinated attempt by the world's largest oil consumers to tame prices that could prompt a backlash by OPEC+. Reaction from Anastasia Amoroso, Chief Investment Strategist at iCapital Network.
I will say the release reserve that we're seeing is more than consensus was expecting, but even if we release 30 million barrels, that was likely to translate into a downturn in price of $2 a barrel or so. And so we're probably going to see something more than that. Of course, a lot of it was front-loaded.
And again, crude oil up now by 2.6%, West Texas Intermediate. In Ohio, a federal jury says 3 retail pharmacy chains recklessly distributed massive amounts of pain pills in 2 Ohio counties. After earnings, Zoom video communication shares are plunging 17.5% right now. Also after earnings, Best Buy is lower by 13.1%. S&P down 0.2. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. Happy Tuesday, everyone. It is Tuesday, November 23rd, 2021. Countdown to Thanksgiving. We're also countdowning. I guess that's not a word, Ed Ludlow, is it?
Not quite counting down, but we're always bracing at the moment for something to happen in these markets.
Often from the White House, and we are expecting to hear some comments from President Biden on the release from the SPR in terms of the energy markets, although it's fascinating to watch what's going on in the energy markets today because oil and a lot of the various equity sectors within energy are trading higher. That is Ed Ludlow. He is in our Bloomberg studio in London. Tim Stenovic is out today. So we're going to talk about the energy markets. We're going to talk about tech stocks, which are down again today, Ed.
Yeah, it's messy out there. You know, the market paying attention to rising yields. They're thinking as much about the taper as they are about the liftoff for rates and what that means for companies with stretched valuations.
We'll get to that. We're also going to get to the Bloomberg Big Take, how every step of the global supply chain is going wrong. We're going to talk about, even though those strained supply chains, well, it's not going to put a bummer on the holiday shopping season. We'll get into that. We've also got HPQ after the close. First up, though, let's get to the Market Drivers Report. There we go. Let's set the Business Week agenda on this Tuesday. In the house with us is Dave Wilson, of course, stocks editor here at Bloomberg News in our Interactive Brokers studio, along with Abigail Doolittle. She's markets reporter here at Bloomberg News. Dave, let's kick it off with you. What are we seeing in the overall trade? Because it feels like a little like uncertainty over some things here.
Yeah, it does. I mean, you can argue it's really a big tech-driven decline. I'm looking at Tesla in particular, down 6.7%, and I was trying to go through the news and figure out what was going on.
Well, it's been on a bounce back the last few days.
Yeah, it has been. Didn't see any obvious reason for the stock being down that much, but you look across the group that they've ascended to, the trillion-dollar companies, they're all lower. Best Buy's already come up as a disappointment in terms of earnings, down more than 13%, the steepest drop in the S&P 500. And on the flip side, best performer in the index, Dollar Tree, Now, they had earnings out. Well, that's what happens, I guess, when you turn Dollar Tree into $1.25 Tree.
Can you still be called Dollar Tree if you're charging $1.25 for most items?
They can call themselves whatever they want, I guess. But, the idea that they are raising prices, that means they can cover their increased costs and maybe make a little more money along the way. So that move is going over well, even if it's at odds with the company name.
And all the while, Abigail Doolittle, away from my stomping ground in tech stocks, I'm looking at the bond market, movement in 2s and 10s. That's really what's top of mind here, surely.
Yes, I would have to agree with you on that, Ed. It's all about the bond market, all about yields climbing, and in a hurry. The 10-year yield at its highest level since October, but from an absolute perspective, 166, as you know, the high this year, 177 earlier this year. And this tech sell-off that you guys are all talking about, we have seen this before, earlier this year, when that 10-year yield did hit that recent high of 177, and it looks as though it may be on its way back to that level, with folks, traders seeming to agree that if there is a Powell 2.0, they're going to stay on the course of normalizing, and that means at some point raising rates. Of course, traders and strategists have 3 hikes priced in next year. That's a lot, according to some people, but it's what the markets are suggesting right now. So, we've seen this before, these tantrums when rates go up for tech, because of course it puts the valuation into perspective.
Those rate hikes still kind of a long way out.
A long way out.
A lot can happen.
Yes, but front and center here in terms of what we're seeing in the action.
Explain something to me. We're expected to hear from President Biden. For those on Bloomberg Radio and watching on YouTube, we are watching a live feed, expected to hear the president step up, talking about the economy and the release of some oil into our marketplace. And yet, help me understand why energy is your top performing group in the S&P 500. Is it because it's already been priced in? Is it because we don't believe OPEC's going to make any cut or increase production? Why?
It's a great question, Carol, because you're right. Energy is the top sector, up 3.2%, and oil itself up 2.4%. That's certainly not the intended goal of that reserve release.
And drillers among the top in the S&P 500.
Yeah, great point. And it was a bigger release than expected. So it could have to do with some folks thinking that OPEC is going to come right back out and they're going to take supply off, and that it's really going to be, null and void action. We don't know that, but the fact that oil is up suggests that some traders think that the supply won't be as fluid as this reserve release would suggest.
And of course, if you're taking oil out of reserves, it's got to be put back at some point, and that means demand down the line. So
thank you, E&P companies, right? You can go out and explore and you can produce.
Right.
And don't forget, earnings season. We're still in earnings season, and there's been a lot of pain in the market today, David Wilson, and some of those earnings.
Tail end of earnings season, really, at this point, Ed. But
relief.
We've already mentioned,
relief.
Yeah, well, we've already mentioned.
I love earnings. What's wrong with you, Ed Ludlow?
Yeah, staying power. I'm tired. It's been exhausting.
Well, there you go. And if you're in Best Buy, you're a little more exhausted, I suppose, with their numbers not living up to what analysts were talking about before the results. And hey, Best Buy's even referring to like thefts as an issue.
Yeah, that's an interesting one because it's such a sensational headline. And if you look at what folks are, and it's horrible. I think the CEO used the word trauma, that their staff in these stores are traumatized by these thefts. But in terms of the numbers, the reason that some are attributing the stock plunging down, I think at one point down more than 16% to the gross margin miss. But it was a miss of about 0.1%, and it was a miss below estimates of 0.2%. So really not a big deal. So I would argue that the reason the stock is down so much, it was up so much over the last 6 weeks, up about 40% in 6 weeks.
Huge.
Price to perfection. Now it's right back down on support.
It's a really good point to give that perspective, especially when you see stocks bouncing around. Abigail, thank you so much. Abigail Doolittle. Dave will be back with his chart and stock of the day. Let's get to the Business Week Bite of the Day. One number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. So today's number is 34. According to a survey by plant-based food brand Wild Earth, 34% of people plan to make a special Thanksgiving meal for their pets this year. In addition, 17% will dress their pets up for the occasion and do a pet photo shoot. Scout will be probably enjoying some Thanksgiving leftovers, nothing special, and she will not be dressed up. Although she does have a little bow tie. I'm just going to say. All right, let's get to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. We are waiting to hear an economic announcement from President Biden. It is expected to include some comments on the administration's decision to release 50 million barrels of crude from strategic reserves. China, Japan, India, South Korea, and the UK are all expected to follow America's lead. Bloomberg's Washington correspondent Anne-Marie Hordern says it's unclear how OPEC Plus will react.
This was a big wake-up call. This was not just the United States. This was politically a big moment because the U.S. was able to coalesce other countries to add modest amounts, not 50 million barrels, what you're seeing in the U.S., but still, it is a bold statement.
Bloomberg's Anne-Marie Hordern. Jury deliberations are underway in the Ahmaud Arbery murder trial. Prosecutor Linda Dunikoski's had the final say in the case of 3 white men accused of chasing and fatally shooting Arbery, who was black and jogging through a Georgia neighborhood.
For 5 minutes, he's running away from them. If they hadn't put him in reasonable fear of receiving serious bodily harm so that he ran away from them, would he be dead? The answer is no.
Dunikoski refuted the defense claim that the men were making a citizen's arrest, thinking Arbery was a burglar. Defense attorneys say the men had a duty to catch Arbery and shot in self-defense. A Cleveland jury says Walmart, CVS, and Walgreens helped create a public health crisis by failing to properly monitor opioid prescriptions. Ohio's Trumbull and Lake counties are seeking billions of dollars in compensation for tax dollars spent dealing with addiction and fatal overdoses. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Now back to you, Carol and Ed.
All right, Nancy Lyons, thank you so much. Nancy Lyons with a world and national news update there in D.C. Right now, we're going to head out to Davidson, North Carolina, cover some of the day's COVID headlines, which includes deaths in Europe from COVID-19, expected to reach 2.2 million by March based on current trends. That's coming from the World Health Organization, putting out a warning as they also push for more vaccination. Meantime, Germany's top health official reiterated that the country cannot rule out any measures to contain the fourth wave. So let's get to it with Dr. Dave Wessner, professor of biology at Davidson College, on the phone from Davidson, North Carolina. Dr. Wessner, nice to have you here with Ed Ludlow and myself. So when you see the day's headlines, you watch what's going on in Europe, I kind of ask all of our guests, is what's going on in Europe going to happen here in the United States? Can we make that assumption?
I think we can. Thanks for having me back again. But yeah, I think we're already starting to see cases go up throughout the United States. We're seeing deaths go up at a lesser rate, but deaths going up also. So yeah, I think that what's happening in Europe now very well could be what we see over the next few months here.
Dr. Wessner, do you get any sense that American officials are sort of complacent? You know, you had Jeff Zients from the White House saying that, you know, we have vaccines, we have boosters, we have the therapeutics if we need them. You won't see what's happening in Europe happen here. Why won't we see it happen here?
Well, I think they have the vaccines. They have those interventions available in Europe as well. I think that's a myopic way of looking at it. Yes, we have the vaccines. We have the boosters that we're rolling out. But all the data suggests that we're going to see the same kind of increase here that we're seeing elsewhere.
Well, and it's interesting. I guess we all have to figure out as we go, make our way through at this point. It's funny, I saw something I was reading in this morning, Dr. Wessner, and it's like, well, wait a minute, if you're 6 months out from your second vaccine, does that mean you're not vaccinated anymore? Are you not protected?
Yeah, I think we should be clear about that. I mean, these vaccines are really good vaccines. If you go back to a year ago, a year and a half ago, a lot of people were saying if we had a vaccine that was 60 or 70% effective, that would be a win. And we got a couple vaccines that are 90 and 95% effective, much better than anyone anticipated initially. The waning immunity that we're seeing with the Pfizer and Moderna vaccines are certainly a concern. But even 6 months out, we're seeing vaccines that are 70% effective. So it's certainly not the case that 6 months after your second shot, you're functionally unvaccinated. Mm-hmm. There's still, even without the booster, there's still a good deal of protection 6 months out.
I wonder if there's a weak spot, though, right? Is it if you're part of the unvaccinated portion of society that you're most at risk? Is it that, broadly we should all still be wearing masks?
I think that's, I guess broadly is a sort of iffy term. I think under certain circumstances, yes, masks should still be worn. If you're in a crowded indoor setting, it's probably a good idea to have a mask on, even if you have both the 2 jabs, if you've gotten that booster shot recently. I think we're at a point now where, yes, we have a lot of interventions that are decreasing severe disease, decreasing hospitalization, decreasing deaths, but we're not out of the woods, and we shouldn't assume that we are out of the woods just yet.
And what about mixing and matching? The CDC's recommendations allow, I guess, right, for mix and match dosing for booster shots. And certainly, I think it's safe to say that many of coming off the J&J one suggest, you get Pfizer and Moderna. What's your guidance on that or your thoughts on that?
Yeah, there's no evidence to suggest that mixing and matching is a bad thing. We've seen nothing indicating that if you had 2 Pfizer shots initially, the Moderna shot is going to be disadvantageous in any way. It appears that mixing and matching is perfectly reasonable. In either case, if you have the same booster as your original 2 shots, or if you have one of the others, immunity goes up dramatically within a week or 2 of that booster shot. So there doesn't seem to be any downside to mixing and matching the vaccines.
Dr. Wessner, I'm always curious, you teach biology. I love biology. If I wasn't doing this, I might be a doctor. That was something that was certainly on my radar. But I do wonder how teaching of biology and against a backdrop of the pandemic and the creating of a vaccine, how it's changed, or what's the interaction with students? What do students want to know and understand?
It's been really interesting for me in that role because we can talk about biology with a real life example that's playing out in real time, which has really been fascinating, and I think it makes the topic that much more real in both the biology we're learning in class and the biology that's happening in the real world. That makes it more real, more understandable, I guess. So yeah, that's really been an interesting situation to talk about something that's happening in real time as we're discussing it.
Well, Carol makes a good point, which is education, essentially, right? In general population, do people understand the science behind the vaccine? Have they spent the time researching the reasons for taking or whether to wear a mask or not? Are you just kind of concerned that people don't take COVID seriously enough?
I think a lot of people don't. I think a lot of people, will say anecdotally, well, I had a friend who was sick for a couple of days, but that was it. So I think there has been this attitude among a segment of the population that it's something that we don't have to really take that seriously. But if you look at the numbers, you all can think back to the big surge in New York. I mean, it was the healthcare system was overwhelmed. And we could get to that point again. I think it's a very serious disease. It's much more transmissible than the typical influenza virus is. It's a much more serious illness than we see typically with influenza. So yeah, I think we have to remember that this is a very serious infectious disease, and we can't forget that at this point in time.
Yeah, I gotta say, in terms of mask wearing, I feel like I will wear one forever. No, just because it's interesting in terms of just basic colds and things. I've seen more people getting sick as things have eased, and it was really nice to go through a full year and not even have a common cold.
Yeah, if you look at the flu season last year, I mean, flu was almost non-existent throughout the United States. And a large part of that was because we weren't gathering. There weren't large groups of people indoors. People were wearing masks when they were out. And just generally, those precautions are going to prevent the transmission of respiratory diseases. This year, as you noted, Carol, we're seeing more cases of flu, certainly, than we had the past couple of years. And to a large extent, that's because people are gathering more, people are out more, people aren't wearing masks like they would in the past. So maybe things will change permanently after this. I mean, we've seen that before with infectious diseases, that things change permanently. And and maybe some aspect of mask wearing or limiting gatherings will be a permanent change.
Hey, listen, I wanted to share with you a frequent listener and watcher of our show on YouTube shared with me a story, Ryan, thank you, and just took a look at what's going on in Michigan right now. The Henry Ford Health System has seen COVID-19 cases soar by 50% in 3 weeks, putting a major strain on staff and patients at the Detroit-based network of 5 major hospitals in southeast Michigan. It's the latest U.S. hotspot, 7-day case rate of more than 600 per 100,000. That's triple the national average. You know, and so we see this, we often talk about this being a disease of the unvaccinated. What do we finally do to get the unvaccinated to believe the message, in your view?
That's a really good question. And there's going to be some fraction of the population that you're not going to reach. I think that's becoming clear. But I think, getting back to Ed's point earlier, I mean, education is key. We have to get the word out that these vaccines are safe. They've gone through clinical trials. They're extremely effective. And not have people get lost in the noise of, immunity wanes over time, so I shouldn't get a vaccine. I think we have to get that word out to that segment of the population. Another aspect of the pandemic that's come up in the news the last week or so are the therapeutics that were developed by Merck and Pfizer. Pfizer reported their antiviral Paxlovid could reduce hospitalization and deaths by about 89% in people who are infected with COVID-19. I mean, that could be a real game changer for the situation.
Dr. Wessner, we have to jump in. We have the president speaking on the economy. Let's head to Washington.
Loved ones in cities and towns all across America to celebrate Thanksgiving. As they do, I want to take a moment to talk about the economy, both the progress we made and the challenges we have to face. We made historic progress over the last 10 months. Unemployment is down to 4.6%, 2 years faster than everyone expected. When we started this job, it was over 14%. Wages are rising. Disposable income is up. More people are starting small businesses than ever before. And our economy has created a record 5.6 million jobs since I became president on January 20th. There's a lot we can be proud of and a lot we can build on for the future. But we still face challenges in our economy. Disruptions related to the pandemic have caused challenges in our supply chain, which have sparked concern about shortages and contributed to higher prices. Moms and dads are worried, asking, will there be enough food we can afford to buy for the holidays? Will we be able to get Christmas presents to the kids on time? And if so, will they cost me an arm and a leg? I told you before that we're going to take action on these problems. That's exactly what we're doing. It starts with my Port Action Plan, a proactive 3-month effort to invest in our ports and relieve bottlenecks. 40% of the goods, for example, that come into this country on the West Coast come through 2 ports, Los Angeles and Long Beach. To help ease the congestion at these ports, I brought together labor and management and asked them to step up and cooperate. To move from operating the ports at 40 hours a week at those ports to 24 hours a day, 7 days a week. And I provided the resources to other key ports, including Savannah, Georgia, and on the East Coast, and to help reduce congestion and undo damage caused by COVID. We also met with the CEOs of Walmart, Target, Home Depot, TJ Maxx, and others. Those retailers, large retailers, and others agreed to move products more quickly, stock the shelves more quickly. And by the way, you may have heard the CEO of Walmart yesterday on the steps we've taken. He said, and I quote, "The combination of private enterprise and government working together has been really successful." He went on to say, all the way through the supply chain, there's a lot of innovation. Because of the actions we've taken, things have begun to change. End of quote. In the past 3 weeks, the number of containers sitting on docks blocking movement are down by 33%. Shipping prices are down 25%. More goods are moving more quickly and more cheaply out of our ports, onto your doorsteps and onto store shelves. And so all these concerns a few weeks ago there'd not be ample food available for Thanksgiving. So many people talked about that, understandably. But families can rest easy. Grocery stores are well stocked with turkey and everything else you need for Thanksgiving. And the major retailers I mentioned have confirmed that their shelves will be well stocked in stores this holiday season. And that's good news for those moms and dads who are worried about whether the Christmas gifts will be available. It goes for everything from bicycles to ice skates. You know, today, though, I want to address another challenge that families are facing, and the one I think they're most focused on right now: high gas prices. This is a problem, not just here in the United States, but around the world. The price of gasoline has reached record levels recently in Europe and in Asia. In France, at the end of last month, it reached about $7 per gallon. In Japan, it's about $5.50 per gallon, the highest it's been in years. Of course, it's always painful when gas prices spike. Today, the price of gas in America on average is $3.40 a gallon. In California, it's much higher. The impact is real, but the fact is we faced even worse spikes before. Just in the last decade, we saw it in 2012 when the price of gasoline hit $3.90. We saw it in 2014 when it hit $3.69. And as recently as 2019, we saw it surpass $3 in many places. The fact is we always get through those spikes, but we're going to get through this one as well, and hopefully faster. But it doesn't mean we should just stand by idly and wait for prices to drop on their own. Instead, we're taking action. The big part of the reason Americans are facing high gas prices is because oil-producing countries and large companies have not ramped up the supply of oil quickly enough to meet the demand. And the smaller supply means higher prices globally for oil. To address these issues, I got on the phone with leaders from other countries grappling with this challenge to try to find ways to lower oil prices and ultimately to the price you pay at the pump. So today I'm announcing that the largest ever release from the U.S. Strategic Petroleum Reserve to help provide the supply we need as we recover from this pandemic. In addition, I brought together other nations to contribute to the solution. India, Japan, the Republic of Korea, and the United Kingdom have agreed to release additional oil from their reserves, and China may do more as well. This coordinated action will help us deal with the lack of supply, which in turn helps ease prices. The bottom line, today we're launching a major effort to moderate the price of oil, an effort that will span the globe in its reach and ultimately reach your corner gas station, God willing. I've worked hard these past few weeks on calls and meetings with foreign leaders, policymakers, to put together the building blocks for today's global announcement. And while our combined actions will not solve the problem of high gas prices overnight, it will make a difference. It will take time, but before long, you should see the price of gas drop where you fill up your tank. And in the longer term, we will reduce our reliance on oil as we shift to clean energy. But right now, I will do what needs to be done to reduce the price you pay at the pump. From the middle class and working families that are spending much too much and it's a strain, and you're the reason I was sent here to look out for you. There's another issue that I will be addressing as well, because the fact is the price of oil was already dropping prior to this announcement, and many suggest in anticipation of the announcement. The price of gasoline in the wholesale market has fallen by about 10% over the last few weeks, but the price of the pump hasn't budged a penny. In other words, gas supply companies are paying less and making a lot more. They do not seem to be passing that on to the consumers at the pump. In fact, if the gap between wholesale and retail gas prices was in line with past averages, Americans would be paying at least 25 cents less per gallon right now, as I speak. Instead, companies are pocketing the difference as profit. That's unacceptable. And that's why I've asked the Federal Trade Commission to consider whether potentially illegal and anti-competitive behavior in the oil and gas industry is causing higher prices for consumers, so we can assure the American people are paying a fair price for their gasoline. I also want to briefly address one myth about inflated gas prices. They're not due to environmental measures. My effort to combat climate change is not raising the price of gas or increasing its availability. What it's doing, it's increasing the availability of jobs. Jobs building electric cars like the one I drove at the GM factory in Detroit last week. For the hundreds of thousands of folks who brought one of those electric cars, they're going to save $800 to $1,000 in fuel costs this year. And we're going to put those savings within reach of more Americans.
Connection lost.
And create jobs installing solar panels, batteries, electric heat pumps, jobs making those clean power generating devices. And by the way, deploying these technologies for each home where they're installed is going to save folks an additional hundreds of dollars in energy costs every year. Let's do that. Let's beat climate change with more extensive innovation and opportunities. We can make our economy and consumers less vulnerable to these sorts of price spikes when we do that. And finally, even as we meet to work out this challenge, it's important to maintain perspective about where our economy stands today. The fact is, America has a lot to be proud of. We're experiencing the strongest economic recovery in the world. Even after accounting for inflation, our economy is bigger and our families have more money in their pockets than they did before the pandemic. And America is the only major economy in the world that can say that. It's testament to the grit and determination of the American people, as well as our unique approach to this recovery and our focus on rebuilding our economy from the bottom up and the middle out, not the top down. Because of that approach, we're the only leading economy in the world where household income and the economy as a whole are stronger than they were before the pandemic hit. Let me close with this. This Thanksgiving, we have so much to be grateful for. Vaccines that are effective, safe, and free. Promising new treatments, providing for hope that we can bring an end to the worst tragedies of this crisis. Record job growth, the strongest recovery in the world, and most of all, the chance to be together again with the people we love on Thanksgiving. As you gather together with your family this Thanksgiving, I want you to know how grateful I am to serve as your president. And I promised you that I'll never stop working to address your family's needs. And together we're going to confront challenges that we face them, are going to face them honestly. And that we'll keep building this economy around hardworking folks who built this country. Happy Thanksgiving, God bless you, and may God protect our troops. And I'm heading to a food kitchen to serve meals right now. Thank you for your time and effort. And I'll have plenty of time to talk to you later. Thank you. Thank you.
No questions, but some comments from President Biden there at the South Court Auditorium at the White House on this Tuesday, talking about the economy specifically and making mention of his administration and how the U.S. economy has made historic progress in the last 10 months, but still, of course, pointing out some of those challenges that are currently facing the U.S. outlook at this point, specifically talking about the pandemic challenges contributing to higher prices, and specifically at getting into higher gasoline prices being a problem. And he made a point to talk about it being a problem around the world. So what he's doing, as expected, is making the largest ever release from the SPR of the U.S., the Strategic Petroleum Reserve, providing some additional supply, he said, that we need at this point, but also at the same point, planning to take some action when it comes to gasoline prices, talking about it's unacceptable for gasoline firms to pocket gains.
Yeah, and saying that he'll instruct the Federal Trade Commission to look into potentially anti-competitive practices by those distributors. You know, he accused them of pocketing the profit, given that wholesale gas prices have come down but retail remaining elevated. Of course, that's something that families all across the country and across the world are feeling right now. You know, it's the same here in the UK.
Right.
Filling up the car is painful right now, so yeah.
And that's a good point. You're there in London, and the president also making time to say that this is higher gasoline prices specifically a global problem. All right, so let's get to it. Let's see what Dr. Ellen Wald has to say. She's back with us, president of Transversal Consulting, senior fellow at the Atlantic Council's Global Energy Center. She wrote the book Saudi Inc. on the history of Aramco and Saudi Arabia. and she has also been a Bloomberg Opinion contributor. She's back with us from Jacksonville, Florida. Hey, Ellen, so nice to have you here. I have to ask you about a couple of things the president said. He said that he's making the largest ever release from the SPR, will provide the supply that we need. Will it, and will it make a difference?
Well, that's a very interesting question because part of the issue is, do we really need more supply? Is the reason why prices are higher really due to a lack of supply? And it doesn't seem like anyone is having trouble getting gasoline or getting crude oil. So it's not clear that the issue is really one of supply. Perhaps the release will have an effect on the market and will encourage, although we haven't seen that happening yet. The biggest drop in oil prices actually happened last week in reaction really to the announcement that we were going to see more COVID lockdowns in Europe. Today, actually, prices rose in response to the SPR release. So
why are prices up? Why are prices up when we do this release? It's been a little bit of a conundrum today, I feel like.
Yeah, well, I think it has to do a lot with market perceptions because this release has been telegraphed. And a lot of people were basically waiting to see, okay, how much is it going to be and what other nations were going to be involved in this coordinated release. And it's possible that what was announced was not nearly as significant as the market was hoping for. And so that's why we're seeing this price reaction.
Yeah, choreographed, as you said, Ellen, well, telegraphed almost because of that curious reaction in the market. You remember when something like this happens, how deeply political the oil market is, you know, how sensitive it is domestically for voters, but also one thing we haven't talked about yet is OPEC Plus. You know, they could easily turn around and change their existing plan in terms of their supply into the market. What should we be looking for with OPEC Plus?
Oh, absolutely. And gasoline prices are always something that's political, especially in the U.S. Consumers always seem to connect higher gasoline prices with the administration that's in office and tend to blame that administration, regardless of whether they have any role over it at all. So it's definitely a political issue in the United States. When it comes to OPEC Plus, though, it's very interesting because the amount that is being released, or the amount that has that we've heard is being released, we still haven't heard from China and South Korea if they're going to be making any releases, is about as much as 3 months of the supply that OPEC would be increasing. So OPEC has been increasing its production by 400,000 barrels a day for several months now and plans to continue that. The interesting twist, though, is that OPEC is supposed to meet next week on Thursday to decide if they're going to continue their increases for January. So some people think that this could potentially throw OPEC kind of for a loop, and will OPEC decide maybe they want to rein it back in? I think that OPEC is really going to be looking at the market overall. They're going to be looking at our oil stockpiles starting to build as opposed to being drawn down, and they will probably look pretty carefully at what's going on in China and what Chinese industrial production is like and Chinese demand is like. They don't make their decisions just based off of gasoline prices in the U.S.
But Ellen, if it's not a supply issue, then what's going on? And the president talked about taking some action on gasoline prices, unacceptable for gas firms to pocket gains, that gap between wholesale and retail gas prices. Is there something fishy going on? Just got about 45 seconds or so. Yeah.
Yeah, it really doesn't appear to be. Remember, there's more that goes into gasoline than just wholesale gasoline prices. There's the price of ethanol, which has gone up. There are the price of other additives, which has gone up. And there's just general inflation. Plus, there's just the price of oil, which has gone up. So there's a lot that goes into this, and it doesn't necessarily mean that there's some kind of anti-competitive, collusive behavior going on.
And also, as Ed pointed out, there he is in London, right? It's expensive. We're seeing it as well. This is just quickly, Ellen, it's a global issue. It's not just a U.S. issue.
Yeah, it's definitely a global issue, and in some areas it's even more pronounced. U.S. Gasoline prices in the U.S. are traditionally much lower than elsewhere in the world, so part of it's also taxes. A lot of states have increased their gasoline taxes over recent years.
Some really great perspective. Ellen, we knew when we saw this story we wanted to reach out to you. So thank you so much. Have a great and safe Thanksgiving. Dr. Ellen Wald, she's president of Transversal Consulting. Check out her book, Saudi Inc., that deals with Saudi Arabia and Aramco. Let's get to world and national news. Another check with Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden is tapping the Strategic Petroleum Reserve as a way to combat surging gas prices across the country.
I'm announcing that the largest ever release from the U.S. Strategic Petroleum Reserve to help provide the supply we need as we recover from this pandemic.
Biden admits it could take weeks before we notice the change at the pump. He's also asking the Federal Trade Commission to look into whether oil and gas companies are illegally profiting by holding gas prices higher at the pump while wholesale prices are going down. First, it was William Shatner. Now more celebrities are hitching a ride into space. Bloomberg's Nathan Hager has the update from Washington.
Blue Origin says the crew on its next new Shepard flight will include Good Morning America co-anchor and ex-New York Giant Michael Strahan and Lisa Shepard Churchley, the eldest daughter of Alan Shepard, the first American in space. This will be the 19th flight for billionaire Jeff Bezos' private space company, and its first with a full crew of 6. 2 of the paying customers will also be the first parent and child in space, Lane and Cameron Bass. Blue Origin says Strahan's flight will include a stipend to be donated to the Boys and Girls Club. Launch is set for December 9th. In Washington, I'm Nathan Hager, Bloomberg Radio.
2/3 of Americans are hoping to avoid political discussions this Thanksgiving. That's according to a new Quinnipiac poll. 21% say they are looking forward to hashing out their political views over dinner. 68% of Republicans, 66% of Democrats, and 69% of independents say they'd prefer to leave politics at the door. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. All right, Carol Massar along with Ed Ludlow on this Tuesday. We're counting down to Thanksgiving, certainly here in the United States. Ed Ludlow, when you're getting together with your family, do you talk politics?
We exclusively talk politics. It's the only day of the year. Well, remember, my family's British on the most part, but my future wife is American. And there's a day of the year where politics is permissible, and that's Thanksgiving Day. That's it.
And do you guys talk... Is it civil conversation or does it get heated?
It is, but remember, I'm trying to be endearing to my future in-laws, so I keep very quiet about all things politics, but I listen intently and nod like this. Yeah.
I'm always the provocateur in my household. My husband's always like, we like to talk politics, and so we always like to have some fun with it. In the meantime, I do wonder if cryptocurrency conversations are going to come up this Thanksgiving. Right. I don't know if it's as heated as it was. We are seeing a couple of stories today on the Bloomberg. One has to do with U.S. banking agencies have issued a to-do list of their plans to tackle oversight of the cryptocurrency industry last year. In an agenda it was put out today, the Fed and other regulators, Ed, outlining what issues they plan to focus on as they consider rules for how banks actually interact with cryptocurrencies. This is a big step, I feel like, when it comes to legitimization.
It's a really big step, and the timing of the story is so interesting, given the appointment or the nomination of Dr. Lael Brainerd as vice chair of the Fed, because that is a potential area of responsibility. We know she wants the Fed to look at digital currencies, but she's worried about where digital currencies, cryptocurrencies, even stablecoins specifically, fit in with an existing payment system, and she sees that as a really big risk. So very interesting, yeah.
I wonder, too, if they'll reach out to Elon Musk, because he certainly has holding back. He has actually some choice words for cryptocurrency exchange Binance on Twitter today. He raised some concerns about the plight of fellow Dogecoin holders caught up in a technical glitch. So he's out there. You track him on a daily basis, right?
Yeah. Yeah, he said, hey, guys, seems what's going on here is fishy. They respond saying, hey, what's going on with your cars and the self-driving software? That seems fishy.
and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are trading mixed. The NASDAQ 100 index heading for the steepest two-day drops in September. Let's begin with that index, down now by 1%. NASDAQ Composite Index down 1.1%. NASDAQ is down 169 points. Shares are falling as the technology sector extends losses, rising treasury yields, damping the outlook for growth stocks. 10-year yield right now, 1.65%. The S&P is down 5, down 0.1%. The Dow holding on to a gain of 133 points, up now by 0.4%. Spot gold down 0.8%, $17.89 the ounce. West Texas Intermediate crude up 2.5% on the day when the president announces that he is tapping the strategic petroleum reserves. Crude up 2.5%, $78.65 a barrel. Meme stocks, including GameStop and Bed Bath & Beyond, are tumbling as investors bail out of riskier assets in favor of value-oriented companies. Right now, we've got Bed Bath & Beyond, BBBY on the ticker there, down 7.3%. GameStop plunging 13.1%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Ed Ludlow on this Tuesday. So climate change, we know what it's done. It's created flooding, droughts, unusual weather patterns, and wildfires. It's a story, and there's actually a story that digs into this. It can be found at businessweek.com. It looks at how wildfires are getting worse, and the one company that has all the chemicals to combat them. That story written by Bloomberg News technology reporter Austin Carr. He's on the phone in Boston, and also joining us, Bloomberg Business Week editor Joel Weber. He's in our Interactive Brokers studio, a company I hadn't heard about.
And yet it publicly traded and is sort of in a solutions business. Where, and you know, of all the places that we're probably desperate for solutions, it's with wildfires, which seem to only be getting worse. And here we are in November, and California still is at peak wildfire fears. And so Austin, like, tell us what exactly this company, Perimeter Solutions, is up to.
Sure, yeah. So you've probably seen on the news during big wildfires, all these planes that are making humongous drops of all that red stuff. That's all retardant made by this one single retardant maker, the biggest one in the U.S., called Perimeter Solutions. And just to give it some context, they actually, for U.S. agencies alone, produced about 50 million gallons of their retardants last year. With the fire season booming, the retardants business is booming as well, and that's why just 2 weeks ago they went public at a valuation of about $2 billion. So for this story for Business Week, we spent a lot of time learning about this sole source contractor for the federal government, how they got so big in the retardants business, and a new Stanford engineered chemical that they're putting out that it might end up changing the game for how we address wildfires in the country.
Tell us more.
The product that you see dropped out of planes is called PhosCheck, and it basically boxes all the fires in, but it's not as effective after it rains a small amount or when there are tons of high winds. It usually actually goes away, and it's not effective after a couple weeks. And at that point, like you've seen in California, another big fire can just happen again. On the other hand, they have this new chemical called Fortify, which again was engineered by Stanford scientists, and it's this white gel that's applied before the wildfire season and sticks on places where there are really high risks of ignitions. We actually have tons of data about where fires originate because we happen to have a lot of wildfires now in the U.S. and in places like vegetation around utility poles or highways or railroad tracks. We can apply this solution now, this chemical gel that will last for months and ideally prevent those fires from happening. As one Perimeter executive told me, he had said that we'd rather be fighting wildfires when they're just 4 inches tall rather than 40 feet tall. And I think that's the promise that Perimeter is trying to pitch the government on going forward.
Hey, Ludlow, you're in London right now, but California's your home. You've seen this.
Yeah, this story really hit home for me. I enjoyed reading it, not just because of the product. You know, I've experienced the fires and the side effects of the fires, but the great thing about your story is you talk about the people that are using the product, the farmers, you know, the wine growers in Napa Valley. But it seems like this company is the only product in town. Is this thing affordable? Is it, you know, is this something that everyday landowners can actually get hold of?
it is something that landowners can get a hold of, but I mean, it's really a product that it's going to take some time to get adoption. And I think the larger market is actually utility giants like PG&E or insurance companies or railroad companies that, they'd rather maybe spend a few $1 million up front on this product rather than billions of dollars in liabilities later on. But in this story, we did interview one local community that had used it, and for 1 mile stretch, it cost about $30,000. Obviously, that's an expensive application, but when we talked to local fire departments, what they said is we'd love to use more of it. I talked to one near San Diego that had seen huge ignitions go from a few dozen in the last couple of years down to 0 after they applied the product. But what they basically said is we'd love to use more of it. We just can't afford it.
So Austin, what other products are they? I mean, this company just went public. Do they have 2 products? Do they have more? What's in development? And exactly how competitive of a space is this at this point, since this problem seems to only get worse and worse?
So they do, this company Perimeter Solutions does make a ton of different retardants, whether they're gels or foams or powder or liquid concentrations, and they all have different uses by the fire department or private companies and homeowners. But to be honest, they're really the only game in town. I mean, just to give you a sense, about 58% or so of their fire safety products are consumed by the U.S. government in the state of California alone. They're pretty much a virtual monopoly, and that's one of the big criticisms. They're the only approved, federally approved product that the U.S. Forest uses for aerial drops, those big planes. And I only talked to one competitor, and the issue that they said is it takes so many years to get on that retardants list to be approved that it is very advantageous for Perimeter Solutions and their primary flagship product, which is that red stuff that drops out of planes. And so we haven't seen much competition. It costs about $3 a gallon for that stuff they drop out of plane. And so far, they continue to be the sole source provider to the U.S. government and have been for almost 2 decades.
All right, I got to ask you, if you're going to end up spraying my vegetables and stuff, is it safe?
It's a really good question, Carol, and there is a lot of environmental concerns. I will also say it's kind of very odd to watch. I went to air bases. I've seen this stuff sprayed in person, and whether it's the red stuff dropping from planes or the new white chemical Fortify, to just see it doused all over the planet, it's pretty eye-opening. And when I talk to the company, they say, look, the stuff that's in here is ammonium phosphate, which is the same stuff that's used in fertilizers. So it actually might make your garden grow a little bit faster. But the downside of it is that it can. Studies have shown that if it's dropped in water areas, it can kill fish. It can also spurn algae blooms and invasive plants that can be disruptive to the natural environment. But the larger truth is there just haven't been enough studies, which is kind of wild. They said in their S1 statement when they went public.
That's what I call a wait what moment.
Yeah, they said in their S1 statement that the current environmental impact is just not known. There's not enough known about it because it could have larger toxicity impact on the environment or the animal population, but there have just been a lack of studies over the years, and they've been limited in scope. And so the U.S. government continues to drop tens of millions of gallons on the planet, just in America, and it's become popular worldwide. And so there's a lot of questions about environmental impact that still have to be answered.
So, most important question of all, from the photos in the story, it looks like there's a vehicle. This is on a trailer. They spray it from the back of the trailer. Did you get to spray the gel?
Awesome. I'm not approved yet by the California Fire Department, although I did go through the chemical retardant mixing. I did get my diploma, Joel, so you'll be happy to hear. We can add that to my my Twitter page, and maybe our Masthead of Business Week.
Does that go before or after daiquiri specialist?
Daiquiri specialist comes first, as always.
Nice to know if the journalism doesn't work out. You've got all these other things that you can fall back on, Austin. Incredible read, a lot of information in there, and check it out at Bloomberg.com. Happy Thanksgiving to you and to you as well, Joel. Joel Weber, editor of Bloomberg Business Week, and of course, Austin Carr, technology reporter and a man of many talents here at Bloomberg News. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading. We've got the Dow at the best level of the day. S&P pushing higher, barely up by half a point, little changed. But that is first time in the green since 10:07 this morning on the S&P. NASDAQ, though, does remain lower. Rising Treasury yields damping the outlook for growth stocks. Tech-heavy NASDAQ 100 index right now is down by 0.8%, building on yesterday's last hour sell-off. So here's where we stand. The Dow up 0.5%, up 175 points. S&P up by 1 point, little changed. We've got NASDAQ down 137, down 0.9%. 10-year yield right now 1.66%. 10-year's down 11/32. Spot gold down $16 the ounce, down 0.9%, $17.88 the ounce. And West Texas Intermediate crude is advancing 2.3% as the president announces the release of oil from the Strategic Petroleum Reserve. Barrel of West Texas Intermediate crude $78.50 right now, up by 2.3%. Well, as for the economic backdrop, Wall Street very much focused on inflation, jobs, and wages. Jennifer Lee is senior economist at BMO Nesbitt Burns.
Now we're going to start watching for the employment data and of course, the inflation data, and, of course, on the wage front. And we're going to get that number tomorrow on personal income. And it's key to watch that because that's what's been having stronger incomes is what is going to drive demand. And if demand continues to be very strong, then we won't see a lot of let up on the supply front, on the supply pressure front.
Jennifer Lee of BMO Nesbitt Burns. The ETF designed to bid against Cathie Wood is starting to deliver as a jump in Treasury yields. The boogeyman stalking growth shares slams her flagship fund. Right now we have got the Tuttle Capital Short Innovation ETF. It is trading higher by 3.5%. And that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. Carol Masser along with Ed Ludlow on this Tuesday. Business Week brought to you by SEI. Crises emphasize character and partnership. One mission, one community. SEI, go to SEIC.com/IMS for more. Well, the Bloomberg Big Take today really relates to something we just heard President Biden touch upon a little bit. He talked about his port action to deal with supply chain problems. Well, about every step of the global supply chain right now seems to be going wrong, and all at the same time. It's a story that is our Bloomberg Big Take today, and let's get to it with Bloomberg News global business reporter Augusta Saraiva on the phone from Washington, D.C. Augusta, Ed and I have been checking out this. We talk about the supply chain all the time here at Bloomberg, on radio, on TV, on YouTube. Tell us about what you looked at specifically.
Hi, thank you so much for having me today. And yes, you're absolutely right. Everything that could go wrong with the supply chain right now is going wrong. I spent all of last week in Los Angeles visiting both the ports of LA and Long Beach. And what I saw just stuck to me so much. I saw containers piling up on the streets. I saw trucks driving around, dropping containers on the street. It's really a complicated situation over there.
Yeah, Augusta, as you know, I was down at the Port of Los Angeles in September, and what I would describe is exactly what you describe. It sounds like nothing's changed, and the president was talking about how he's kind of put pressure on the port to operate 24/7, find some kind of resolution between the workforce and management there. But what are the choke points? Why are things moving so slowly?
Well, as I said before, everything that could go wrong is going wrong, right? So it all started because we had a boom in e-commerce in the United States. So we saw a lot of containers getting to the country at the beginning of the year. And then all of a sudden, you didn't have truck drivers to drive those containers around. The railroads weren't enough because of the old infrastructure. At the same time that you have a shortage of truck drivers, you also have a shortage of labor on the warehouse side. You have a shortage of warehouse and yard space. So it's really a complicated situation throughout. And as you said, the situation doesn't seem to be getting better.
Well, what I'm confused about, I keep trying to figure this out, Ed, I don't know if you think about this too, having seen it firsthand, is I feel like, the rail systems, that's not a new problem. There's things that are out there in terms of our supply chain that aren't new issues. What is it that is the thing that caused us to really bring the supply chain to our knees? And it's a global problem, right? It's not just a U.S. situation. Is it lack of workers because of the pandemic? Is that the common nut?
As you said, it's a global problem. It's a problem that actually started in Asia earlier this year, and then you had all of the ships that were late to arrive to the U.S. getting here at the same time. You have containers that can't go back to Asia, so you have a lot of empty containers stuck in the U.S. right now. But yeah, it's a complicated problem. It's a problem that stretches throughout the supply chain. And as you said, it doesn't seem to be getting better anytime soon. And it seems like the breaking point has seemed to be the pandemic, right? Because people started to buy more in the U.S. So all of a sudden you have this huge influx of goods into the country. And we just don't have the infrastructure, as you said, to deal with all of that at the same time.
Well, it's Thanksgiving week. We're about to hit the peak of holiday shopping season, and there was a bit in your story which I just didn't appreciate, which is we've been worried about whether things would be on shelves, but if you wanted to get something onto a container, you had to do it months ago to make sure that it got here in time. Can you kind of explain that issue to us?
Oh, yes, exactly. As I was saying before, you have a lot of companies, and when I say a lot, it's from small retailers, it's from secondary sort of stores up to Walmart, up to Best Buy, and they're all trying to goods to the U.S. as soon as possible. So we saw at the same time a lot of different companies trying to get those goods here, and the ones that had the means to do so, as it was the case of Walmart, of Target, for example, which were chartering ships to get goods to the U.S., for them it worked out just fine. So we're seeing that they have high record inventories this year. But at the same time, for smaller companies, some of them might still be waiting for Halloween costumes to get to the U.S. at this point.
Can I ask,
wow,
is there anything that, Augusta, that you've tried to order that you haven't been able to get?
Oh, yes.
Oh, okay.
So there are many things that I'm thinking about, but at the end of the day, I didn't order a Halloween costume myself because I went on Amazon a week before Halloween, and they said it was going to take at least a month to get my costume here. So I would be getting my Halloween costume now at the end of November. So for me, it was that, but for a lot of Americans, it was an array of different things, from cell phones to Halloween costumes to even some of the more basic bulk goods.
Ed, have you not been able to get anything?
This is actually completely true, but we ordered a bake dish in February of this year to bake some stuff. And it's
sourdough bread? No,
now
just
until
kidding.
March of, some kind of baked good, and it's on back order until March of next year. And I don't understand why. Like, it's made of glass or whatever, it's very strange, but I give up by this point.
Well, it's just interesting, and especially when, we're pointing figures, either at our politics, our political leaders or administrations, but it's a global situation. And I guess that's why I'm trying to understand the common denominator. Is it just the flow of money into people's pockets because of pandemic aid programs, and that we're just buying that much more stuff? And that has put the ultimate strain on the system, along with some labor constraints. Augusta, thank you so much. It's a Bloomberg Big Take, and it really digs into what will be and is one of the major stories of 2021, and certainly the pandemic. Augusta Saraiva, she's global business reporter at Bloomberg News, on the phone from Washington, D.C. So, Ed, what haven't you been able to make because you don't have that pot or that pan?
Yeah, so I'm missing some of my comforts of home, some British pies, apple crumble, things like that. But, Carol knows I'm a keen baker. So,
you are.
Yeah.
So hopefully it'll come. But that's a long time to wait. We've been waiting on one piece of electronics, and that I feel like plays into some of the chip shortages that are out there as well.
A gift?
No. Well, a gift my husband bought for himself.
Oh, okay, fair enough.
All right, let's get back to world and national news. Over to Nancy Lyons. She's in her 99.1 newsroom. Hey, Nance.
Thanks, Carol. President Biden is taking steps to lower gas prices and is releasing 50 million barrels of crude from The U.S. strategic reserves, he says the wholesale price of oil has eased a bit, but consumers are not seeing it at the pump. And he's asking the Federal Trade Commission to look into why that's happening.
If the gap between wholesale and retail gas prices was in line with past averages, Americans would be paying at least 25 cents less per gallon right now, as I speak. Instead, companies are pocketing the difference as profit. That's unacceptable.
Biden says he'll do what's necessary to ease prices. Jurors are deliberating the case of 3 white men accused of chasing and eventually shooting to death black jogger Ahmaud Arbery. Judge Timothy Walmsley addressed the jury before their deliberations.
You are considering the case of the state of Georgia versus Travis McMichael, Gregory McMichael, and William R. Bryan. Now that the evidence and the arguments of counsel have been submitted to you, it becomes my duty to give you the final instructions of the court.
Again, Judge Walmsley, prosecutors say the men have no right to claim self-defense because they were the ones provoking the confrontation, while defense attorneys say the men were making a citizen's arrest. In the Charlottesville civil trial concerning the Unite the Right rally, jurors have found white nationalists liable for conspiracy to commit violence under Virginia law, but could not reach a verdict on 2 federal conspiracy charges. The jury awarded slightly more than $25 million to 9 people who suffered physical or emotional injuries during the 2 days of demonstrations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master along with Ed Ludlow on this Tuesday. Ed is in for my co-host Tim Stanovic. And one of the names that we're watching in a big way, and I'm guessing it might be on your decliner list, is Best Buy today. It's the #1 decliner in the S&P 500, down almost at its lows, down almost 17%, a little bit off of that, but Ed, still down about 12.6% today.
Yeah, the headline is eye-grabbing, right? Attention-grabbing, because the erosion to margin they're attributing to theft. The people stealing product from the store, which you'd never expect a CEO to discuss on an earnings call, but he's saying, quote, this is traumatizing what they've seen in this quarter just gone.
Have you seen any of these videos? I've seen them on some of the news programs of just these groups, and it seems like it's, they've been able to track like the same people going into these stores and pulling out massive televisions, TVs, and other things, and while people are watching, and I guess it's just catching everybody off guard.
And even in this past week, we've seen in California looting in San Francisco. But what we don't know is why. Is this because of inflation? I mean, they really did not discuss that on the earnings call, and it's certainly something to discuss over the week.
Yeah, or that they can just get away with it. Some of these smaller groups, they're brandishing guns or crowbars, according to the Best Buy CEO, Corey Barry, telling reporters today. You mentioned San Francisco, Northern California has been a particular trouble spot. She said, but Best Buy has seen pockets of criminal activity all over the country. And she says, it's pretty traumatizing for their sales associates. What do you do if you've got somebody who's got a gun? Like, do you just back off? Probably, right?
Of course, you back off, but you have to remember, and I'm not being unkind, that this is a company that's bottom line's being hit by a ton of other stuff as well, right? Higher input costs. They're still dealing with the same mix of everyone else, which is consumers not sure about whether to spend online or go back to brick and mortar. So, very unfortunate, but they got other problems as well.
Yeah, no, it's a good point. Anyway, it's something that we'll talk about a little bit more, retail in general, in just a moment. This is Bloomberg.
Connection lost.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A choppy trading session, 43 minutes to go to the closing bell. Let's get the very latest right now as we head over to the First Word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading mixed right now, with the Dow currently up 155 points. S&P's higher by 2, while the Nasdaq still lower, down 112. The U.S. 10-year yield at 1.66%. Gold is down 16, transports rise 109 points, and Bitcoin is trading higher by 2.1%. Among the main 11 S&P sectors, energy was the big winner, while consumer discretionary was under pressure. And leaders to the upside in the Dow, Goldman Sachs, Travelers, and Chevron. Salesforce fell 2.1% and led to the downside. After earnings, Best Buy dropped 13%, Zoom Video fell 16%, and in deal news, SPX Flow rose 6% on takeover speculation. In other news, a Cleveland jury concluded that Walmart, CVS, and Walgreens fueled the opioid crisis. And wrapping things up, Autodesk, Dell, VMware, and HP Inc. all report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. Some big names there. We'll be all over those as they break, and to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we just talked about Best Buy shares plummeting, and we're going to get into that a little bit. We also see Dollar Tree selling the majority of its products for more than $1 now. There's a lot going on when it comes to retail. And then, of course, there are those supply chain woes that we continually talk about. Lots going on, as I mentioned. Our Bloomberg Intelligence senior analyst, Poonam Goyal, keeping track of it all and writing, even with those supply constraints, Americans, they're going to be out there shopping this holiday season. She joins Ed and me on the phone in New Jersey. Poonam, good to have you here. First up, before we get into the holiday season, any thoughts on Best Buy? I know you cover a lot of different retail, and this maybe doesn't fall right under some of the companies that you follow, but those criminal groups, like, I can't, it's very odd to have a CEO come out and talk about that, right?
It is. It must be a really big problem for them to come out and say that. But it's a scary one because not only is it bad for them on the margin side, but it prevents people from wanting to go to the stores, right?
Mm-hmm.
Because you're hesitant about what you'll have to deal with should you go into the stores, and the employees working there must be scared to want to work there. So it has a lot of different effects.
You have to remember what Best Buy does as well. I wish we discussed a moment ago, Carol, but they sell things that we really needed in the pandemic, and we're not buying as much of right now. Screens, electronics, all this kind of stuff. It's kind of like a 1-2 punch. I feel bad for them. I guess, Poonam, broadly, is demand really good right now, for Best Buy electronics, for brick and mortar?
Well, Demand is good overall in retail, and we've seen that in the retail sales numbers leading up to as recent as recent earnings results that we've seen from the retailers. That said, electronic sales, computers, TVs, and all of that, you have to remember we're lapping the pandemic, right? When there was mostly at-home learning for schools. Now kids are back in school, so the demand has tapered from last year's levels, but it's still higher than it was in 2019.
No, that's a really good point. I have to say, even though on my street I've seen some boxes for people who have obviously just gone out and bought a huge screen TV at this point. The other thing is Best Buy did talk about spending more on promotional activity, and that really hit into gross margin. All right, so let's talk, Poonam, about retail shopping. I know my daughter's already given me her holiday list. It's a little bit toned down, which is kind of nice to see that from your kids. Tell us, though, why it's going to be off the charts. Is it because of higher prices, or are we going to actually be selling more stuff?
It's going to be a combination of both. So demand is higher, especially for categories like apparel and toys, where kids are going out more and people are going out more, so they want new things. On the sales side, the reason why we're expecting for high single-digit or even better gains is in part due to higher prices. Yes, prices will be higher because of inflationary pressures, but also discounting will be lower. So while there will be discounts over the coming days and even through Christmas, they won't be as pronounced as they were in past years.
Should we put everyone in a bad mood and talk about supply chains? I mean, is my favorite sweater going to be on the shelf this holiday season? The things that I want, are they actually going to be there?
They will, but how long they'll be there is the bigger question, and that's why retailers
tell us more.
Everyone, so get what you want now.
Well, it's funny that you say that too. Go ahead, Ed, please.
Well, I was just going to say that in your research, I'm being cheeky, but in your research, you point out pretty clearly, right, that the holiday season shopping window is long this year. You know, everyone is going to have every opportunity to go out. You know, why would that give us a boost?
Because you get an extra shopping day. So if you look at the time frame from when people really, spend the most time buying gifts and thinking about the holidays, it's between Thanksgiving and Christmas. And this year, the calendar lends itself one extra day. So an extra day is always an extra shopping day, means extra dollars for the retailers.
Yeah, no doubt about it. It makes a difference. I know that there's been a time where I've really kind of finished my shopping, and then all of a sudden I go out because I have an extra day and I pick up a couple of little things. What's interesting is, so who's going to benefit the most? You talk about Walmart and Amazon in your recent note. What's interesting is we just talked with our Augusta Saraiva, who's looking at the global supply chain, and she's pointing out how everything's going wrong at the same time. And yet, there's companies like Amazon that can find alternatives to getting their goods here. Walmart can do the same thing, right? Whether they reach out to different suppliers or use their own logistical chains to some extent, they've got deep pockets to be able to do so.
You're absolutely right on that. The way we simplified is the bigger, the better this holiday. So the big retailers really have a competitive edge because they can afford to pay more to get the goods here. And also, in addition to that, Walmart and Amazon specifically don't have an inventory issue right now. Walmart's inventories were up about 11% at the end of the third quarter. So they've been able to bring goods in. The other thing is they have a large third-party marketplace, both of them. And that helps flow inventory, at least online, for both retailers.
And very quickly, Poonam, I mean, foot traffic seems to be pretty good, though, doesn't it? Isn't it strong, the number of people actually going into a store? Are they just excited to be shopping in person?
It is strong when you look at it versus last year, but the numbers that we're looking at against 2019, it's actually still down.
Interesting, too. But you also point out an influx of tourists into the U.S. over the coming weeks could drive at least a high single-digit retail sales gain over the holiday period. So it's interesting. A lot of different factors at play. Poonam, always good to get a gut check on what's going on in retail, especially as we head into the all-important holiday shopping season. She is senior analyst for e-commerce, athleisure, off-price retail. That means TJ Maxx, which I always love. Ed Ludlow, do you go to TJ Maxx?
Ooh, I do.
All right, let's get to world and national news. Oh, this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Master along with Ed Ludlow. He's out there in London. I'm in New York. Ed, you ready? Can you guess the song, you think, when Dave joins us in a moment?
I can never guess the song, and I actually wish he'd throw me a bone once in a while, but I am looking forward to his chart of the day.
Don't hold your breath on that one, babe. All right, we're going to get to Dave Wilson and his chart of the day in just a moment. He's had a busy day. It's been a busy Tuesday. First up, though, let's get to Charlie Pellet with a check on the world of business. Hey, Charlie.
Thank you very much. Better be London calling if that's where Ed is. Here's what's going on. We have got the Dow higher, S&P, NASDAQ. They are both lower. Truly little changed on the S&P. It's been fluctuating over the past hour or so. Right now, higher by half a point. Little change, bottom line there on the S&P. NASDAQ down 118, lower there by 0.8%. 10-year, all about the 10-year right now, down 13.30 seconds. 10-year yield 1.66%. The Dow up 150 now, close to the best level of the day, up by about 0.4%. Bottom line here, stocks fluctuating. Tech sector extending losses, rising treasury yields, damping the outlook for growth stocks. Again, the S&P little changed. Energy and financial stocks leading the gains. Spot gold down about 0.8% right now, $17.91 the ounce. West Texas Intermediate crude on a day when the president announces that SPR release, Strategic Petroleum Release. We've got crude pushing higher by 2.5%, $78.70 right now for a barrel of WTI, up $1.95 a barrel. Got to mention the NASDAQ 100 index lower again today, down by 0.7%. The World Health Organization says deaths in Europe from COVID-19 will reach 2 million by March based on current trends. European Union officials are trying to agree on how to manage vaccine rollouts amid street protests. Dr. Amish Adalja is a senior scholar at the Johns Hopkins Center for Health Security.
What Europe should be doing is, at the same time as encouraging vaccines, using rapid tests for people to know their status so that they can go about their life if they're not vaccinated. And then lots of private businesses should be trying to require vaccines as a condition of employment. I think that's a much better route than lockdowns this late into the pandemic.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Mixed day for a lot of the vaccine stocks that we track. Pfizer, for example, down, little change now, down by about 0.1%. ADRs of its German partner BioNTech, they are down 3.9%. AstraZeneca's ADRs up 0.5%. Moderna down 2.2%. J&J Johnson & Johnson up by 0.7%. JP Morgan Chase CEO Jamie Dimon is quipping that his bank is likely to outlast China's Communist Party while reiterating his company's commitment to doing business in that country. JP Morgan Chase shares up right now by 2.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Ed Ludlow, and this is Bloomberg. How does that happen? Is it just downloads
Super Bowl.
or something?
It was Super Bowl, right?
That's a big reason for it, but it's a combination of weeks on the chart and position on the chart. And you know which song Blinding Lights supplanted?
No.
The Twist.
Oh my gosh, that's a long time.
Yes, it is.
Talk about a gap.
You are not kidding.
That's pretty cool. That's
I should
really
point
great.
out that the Super Bowl was in February, right? I'm just pointing out that gave this song momentum throughout 2021.
Oh,
it was
absolutely.
the launch pad, right?
Absolutely. 90 weeks on the top 100 chart. So that's 21 months.
That's a long time.
You're
It's
not
a
kidding.
really long time. Sorry, I'm also checking to see who Gigi Hadid is married to. Zayn Malik, as I guess, but I think they've also maybe broken up. All right, all right. I'm going off on a tangent.
You work on that, and I will talk to people about the chart, okay?
Okay, please do.
You know,
That's what people care about.
Usually when we
Let's
talk
get us back
about...
on track.
Well, okay. Well, when you talk about the weighting of
fun.
companies in an index, usually it's in the context of the S&P 500, and everybody talks about big tech, whether it's Microsoft or Apple, or companies that are sort of associated with technology and not in that particular industry group, like Meta Platforms, the old Facebook, and Google's owner Alphabet. The folks at Schwab, specifically David Kastner, who's a strategist focusing on sectors, have looked at the S&P 500 Information Technology Index in particular, focusing on the weight combined of Apple, Microsoft, and NVIDIA. As it happens, they make up more than half, those three stocks, of the index's value.
So what happens with them sways where the index goes, and you have to remember that.
It absolutely...
When you trade or buy or invest in that index.
It absolutely does. And that's the point. And you're talking about an index with 75 stocks. And what the chart shows is if you look at the top three, not necessarily NVIDIA, it used to be Visa, actually, because that company and MasterCard considered tech companies by S&P, at least for now.
Right.
You go back the last 5 years, you have seen that top three share of the index increase. So you're talking about a group that has become increasingly concentrated as market values have risen. I mean, that's the point here. You've gone from numbers in the mid-30s back in 2016 to more than 50% now.
So just understand that when we talk about, indexing and how it's a great way to diversify, within your portfolio, well, maybe not so much.
Yeah, especially when you go down to the sector level. I mean, you do have that risk. And that's what Schwab is pointing out. If you want to know more, folks, send me an email. Or not. Let's just move on to stock of the day, shall we?
Let's do the stock of the day.
All right. This is a company called XL Fleet. The ticker is XL. It's a company that's working on ways to make vehicles, commercial and government vehicles, electric.
Yeah.
And last December, it went public by merging with one of these blank check companies. You know, the stock surged when the deal was done, and since then, it's been nothing but down, basically. Yesterday, the stock set a record low. It was off 87% from its peak in December of last year.
Rally today, though.
Absolutely. And that's because it was finally disclosed that XL Fleet is participating in a pilot project with the Defense Department.
Interesting. Well, that's a nice
It's actually been around a few months,
Yeah.
but the Pentagon finally announced it yesterday, and the company followed suit today. So XL up as much as 37.5% in response to this, higher by 7.5% at the moment.
XL Fleet, by the way, installing up to 1,000 EV charging stations at that UBS arena. We were there, Tim and I, on Friday. So interesting company. Dave Wilson, thank you so much. Check out his stock of the day, 4:15 Wall Street time on Facebook, LinkedIn, and on Twitter. Hey, Nancy Lyons, let's get a check on world and national news. Zayn Malik, thank you so much.
Yes. I had to correct you there.
You and me, we're on the same wavelength.
Yes, that's right. Well, a Virginia jury has reached a verdict in the federal lawsuit related to the Charlottesville Unite the Right rally back in 2017. Jurors found white nationalists did engage in a conspiracy and are liable for 4 out of the 6 claims against them. The jury was not able to agree on 2 federal conspiracy charges. Victims of the violence stemming from the rally, they were awarded more than $25 million. Ahmaud Arbery's murder case is now in the hands of the jury. 3 white men are accused of murder and other charges after pursuing Arbery, who is black, through a Georgia neighborhood where he was jogging. Prosecutor Linda Dunikoski says the men on trial initiated the confrontation, which resulted in Arbery's murder.
This isn't about whether these 3 men are good people or bad people. That's not what this is about. It's about responsibility. It's about holding people accountable and responsible for their actions.
Dunikoski says the self-defense argument does not work if you initiated the confrontation. Defense attorneys for the men say they were making a citizen's arrest, fearing that Arbery was a, quote, frightening burglar. The suspect in the deadly Christmas parade incident in Waukesha, Wisconsin, is due in court this afternoon. Authorities say Darrell Brooks is the lone suspect and is expected to be charged with 5 counts of intentional homicide. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyon there with an update on world and national news. Carol Masser in our Bloomberg Interactive Brokers studio. Ed Ludlow out there in our London bureau, across the pond, as they like to say. Interesting story. Do you know this Goldman Sachs Group analyst who apparently has done really well in the British Bake Off? You're nodding yes.
Christelle Pereira, you know, she's not the first actual Goldman employee to take part. There was another in 2018. But she is somebody that kind of developed a hobby of baking during the pandemic, like I. And she has taken her skills to Great British Bake Off. There she is for our YouTube audience. You can see. And she's gone really far.
She's really good.
She's really good. But the point of this story on the Bloomberg, one of the most read over the last 8 and 24 hours, is that she has sort of become famed in the world of finance, London finance, because of her success in baking.
Well, it's interesting. She talks about her clients are learning about the news and her participation in the British Bake Off. And she says it's created a nice atmosphere. And given the last 2 years, it's been a nice positive distraction. But it sounds like when she's sitting down with, I guess, clients or other investors, right, this is what they want to talk about.
Yeah, and she works in the insurance asset management division, and 90% of the conversation, according to Person Filling the Matter, was about baking over a lunch meeting. And there's a kicker on the story that Goldman had an internal baking competition, and I'm sorry to laugh. Several of the analysts thought that their muffins were better than hers.
Why do you find it so funny that people are...
It's a very funny detail in the story, but I must read.
You are funny. I'm going to lose you, aren't I? But as somebody who bakes, I mean, I guess you have a real appreciation for her, huh?
Yeah, I have to be honest, though. I did try a lot during the pandemic.
Did you?
Tried as, my fiance and I, but I just don't have a talent for it. I don't, and so I've given up.
Well, baking is one of those things. Like cooking, I don't cook well. My husband does, because you can just throw things together and just have an expertise. I'm a better baker because it's you have to follow the thing.
Methodical.
Exactly. I love that you laughed.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Choppy session. The Dow higher, S&P higher as well. Little change there. We've got NASDAQ on the minus side, with NASDAQ down 103 points, down by about 0.6%. The NASDAQ 100 index also down 0.6%. 10-year yield 1.67%. The S&P up 3 now, up 0.1%. The Dow up 178, up by 0.5%. Spot gold down 0.7%, $17.91 the ounce. West Texas Intermediate crude rallying 2.6%, $78.77 a barrel. Crude oil higher on a day when President Biden announces that he is releasing oil from the Strategic Petroleum Reserve. Again, shares fluctuating. Tech sector extending losses. S&P up 3 right now, up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10 minutes left in today's trading session. We are driving to the close. We're definitely off our best levels of the session, although I should say for the Dow Jones Industrial Average, kind of hovering just off of it, but certainly a little bit different when it comes to the S&P and the NASDAQ. Let's talk about the market trade today. Megan Horniman is Director of Portfolio Strategy at the Wealth Advisory and Multifamily Office firm Verdens Capital Advisors. She's back with us on the phone from Hunt Valley, Maryland. So Megan, nice to have you here. Just a few days away from Thanksgiving. We're talking inflation. We're talking about supply chains. We're talking about a release from the SPR. What is top of mind for you and your clients?
So I think it's going into year end, and what's going to happen with the rally here. That's, I think, one of the biggest concerns for investors, especially since we're starting to see this backup in interest rates, and we have seen that. Historically, when we see these kinds of moves in interest rates, it does challenge the equity market. We're seeing that today with specifically those expensive tech names, as well as seeing the volatility index increase today.
The other big news items of the week, of course, the nominations to the Federal Reserve. And I know that you wrote going into the week that you felt Biden would keep a relatively dovish FOMC because he wanted to help his spending agenda, right? How do you think about things now?
I think, obviously, yes, he wanted to have two things. As someone who's viewed as a relative dove in the market because of the fact that he does have a very aggressive spending agenda. And if you just look at estimates for, the net interest costs for the government over the next decade, they are exposed to skyrocket. So it presents a problem for any of his priorities. But Powell has also kind of been a little bit more towards the center in knowing that we do have some inflationary pressures that need to be addressed. So you see the market now pricing in the potential for 2 rate hikes in the second half of next year. So I think that the other thing that markets like is just the continuity. Having someone new, markets have never really liked that. So having Powell at the helm again, I think keeps that, nerves from unraveling.
Megan, what's the constructive conversation to have around interest rates right now? I mean, we did see, another pop up right in the 10-year today, and we are seeing certainly coming off of that Fed nomination. However, it's still a long time from here until, let's say, mid-year of next year when we'll see the Fed easing off, right, in terms of those asset purchases. But easing off does not necessarily automatically guarantee an interest rate hike, especially as we watch kind of what's going on around the globe. If China slows down, there could be some other issues. If the pandemic continues to weigh on the economy, maybe all bets are off.
Yes, there's a lot of moving parts there that you've outlined. And I think the one thing that we believe is that interest rates right now where they are do not justify not only the economic environment, but also the inflation environment. So we do think the trajectory is higher for interest rates next year. However, all those things that you mentioned are some of the reasons why we don't think you're going to see, a massive spike in interest rates over the next 12 months. We still do have a lot of uncertainty around the supply chain disruption. We have a lot of uncertainty around the labor market. we also have some uncertainty around how sustainable this consumer can be in the face of rising prices at the pump, rising prices on everyday necessities. Can we continue into 2022 see the sustainability of this consumer? So you're going to have a little give and take, I think, in the interest rate market. But at the end of the day, the Fed is very warranted to taper. It was an emergency measure. We're no longer in an emergency situation. And I think that the next phase for them is to gradually try and normalize interest rates. So we're still calling for that in the second half of next year.
I wanted to ask you about the consumer, not just in the context of inflation. How closely are you following the data around COVID-19, particularly in Europe? You have Goldman Sachs, JP Morgan, Morgan Stanley, all saying that the kind of spikes we're seeing in Europe, they'll be temporary, and they don't necessarily think that they'll come over to the United States by the reopening trade. Is that the way you think about it?
Yeah, because we've seen spikes, and you have some short-term kind of reversal in that reopening trade, but then they do tend to peak and moderate lower. It's just we don't know when. And I have seen the data out of Europe, specifically in Germany. It's actually eye-popping if you look at the chart and what they're dealing with right now. But keep in mind that we are moving closer and closer, getting more and more people vaccinated. That's a positive. But the biggest part of COVID that we're going to look at into 2022 is the approval of some more therapeutics, because those hesitant to get a vaccine, which is everybody's own personal decision, if there's a therapeutic that's out there that can reduce the risk of serious infection, that's almost as good as the vaccine when it comes to the risks and strain we put on the hospitals. And that's what we're concerned about right now in Europe.
It's interesting, too. And you guys deal with high net wealth individuals. And I do wonder, we talked about the initial part of the conversation about some of the things that everybody's talking about, whether it's inflation or supply chain constraints. What would you say is their number one concern right now? Because many of these, it is inflation. Okay. Because many of these individuals have gotten wealthier, right? Safe to say over the last year or two.
Yeah, absolutely. I still think it's inflation. I can give you the second biggest concern for our high net worth individuals, but inflation is the biggest one because it's now visible across so many aspects of the economy. Before, when it was just lumber prices or it was just food, or some of the COVID related things, that we could say some of that was transitory, but people don't. The one thing people will remember and realize right away is at the gas pump, and we've seen more than $1 increase year to date in gasoline prices. That's a big hit to consumer budgets. So that's going to be felt by all consumers, high net worth or not. The second biggest thing would be what will happen with taxes. And the one thing we do know is that we don't think taxes are going to go any lower. It's just what magnitude will that hit high net worth individuals as well as business owners.
How worried or not are we about Biden's commitment with infrastructure? How worried or not are we about what the president was saying today about his, efforts in the supply chain? We were speaking to a Bloomberg News colleague a little earlier this hour that all of the bottlenecks in global supply chains that he was saying are working to be undone, they're still there. What is going to be the impact of fiscal policy and government stimulus over the next year or so?
So the infrastructure's done. There's nothing we can do about that. But over the next year, this is going to be more of an impact into GDP in the longer run, not necessarily, for example, for next year. But when you're talking about so much money chasing so few goods because the supply chain is disrupted right now, then any additional spending is really not needed. The only thing that is going to fix the supply chain disruptions and some of these kind of interconnected inflation pressures is either a slowdown in demand or an increase in supply. And we know that there will be an increase in supply. It's just not something that's going to turn over overnight. I mean, we just understand that there's a lot of ships sitting out to port. There are some disruptions, but with so many different facets of the supply chain that can't be fixed right away, it's going to take time to fix that. So we need to see some moderation in the demand side. So any additional spending from the government that adds to the pent-up demand from the American consumer, it's just, that is a concern and a risk that we see.
Hey, Megan, just got about 30 seconds here. Just quickly, what's number one investment that many of your clients tend to ask about?
They always want to know about the equity market and can we continue with this bull market. We do think that is the case, but we would allocate outside of the U.S. as well, because I think next year, 2022, there could be some rotation there. I don't think the U.S. is going to deliver the same types of returns. And then trying to find some, attractively valued inflation hedges, we would lean more towards the infrastructure. There's lots of different investments out there in the infrastructure front that we think will they're structured to help you with that as well.
All right, great to get that in. Thanks so much. Have a great Thanksgiving. Megan Horniman, she's Director of Portfolio Strategy at Verdance Capital Advisors, joining us on the phone from Hunt Valley, Maryland. Just a few minutes left in today's trading session, bouncing around in today's session. Right now, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the closing bell on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we're about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Katie Greifeld counting you down to the closing bell, here to take us beyond that bell with a global simulcast. Carol Massa, Ed Ludlow, bringing together our Bloomberg television, radio, YouTube audiences. We sort of tied up all nicely in a bow of which has been, once again, Carol, a story of tech under pressure and oil moves that, well, perhaps weren't quite what the president was expecting.
Yeah, that's the thing I find fascinating. We saw oil dip back last week, and some of the folks that we talked to, maybe that was in anticipation of some moves maybe by the president to do what he did actually today. Energy, your top performing group in the S&P 500. Ellen Wald, who joined us, she said it's not a supply issue. You go to the gas stations, there's plenty of gas out there. There's a lot more metrics at play, including higher taxes by a lot of states when it comes to gas prices, Ed.
Yeah, I feel like I've heard this story before, guys. Yields higher, tech selling off. Caroline, didn't you and I talk about this in January and February?
You sound exasperated, Ed. He's frustrated.
I get it that we're all eyes on a Fed, a more aggressive taper, a precursor to a liftoff for rates. Valuations have been stretched for a long time. So I guess I'm trying to understand what the psychology is around investors that are selling off these tech stocks today.
Well, you do wonder if there's sort of a recalibration or at least maybe some technical factors, Katie, at least within the bond markets that people have really talked about as you've gotten a lot of clarity and perhaps maybe bets on the wrong direction that are unwinding. But we had a really interesting guest, Matt Maley over Miller Tabak, talking about sort of that key level. Once you get to a 177, it's been hard to break above that when it comes to bond yields.
Exactly. That seems to be the high water mark for yields. And it seems like, we do get worked up to Ed's point about bond yields. Every couple of months, it slams tech for a few days, and then we go right back to tech being in charge because, again, it just feels like we can't get above that 177 level on 10s.
Meanwhile, let's go to the levels in the key benchmarks as we see the ringing of the bells, the clapping, the cheering, the S&P 500 inching up just 7 3/4 of a point. That's up just 0.2%. 4,690 is where we end the day's trade. But the Dow, actually the outperformer, value stocks where it's at, up 0.5%, 194 points higher, 35,813. The Nasdaq, though, big tech having another woeful day, down 0.5%, 79 points, 15,775. And let's pan out. Let's have a look at what the small caps did, because under pressure too. Currently, as we see, Russell 2000 was lower on the day. 2,327 is where we closed.
And how have we not even mentioned the Turkish lira? And I know maybe we'll get into this in a little bit, but it is fascinating to see that plunge to a record low. And just a reminder, and not apples to apples, certainly with the U.S. or any other major developed countries, but it's a reminder of when you have missteps in central bank policy, Taylor, what can go really, really wrong.
Well, and some missteps perhaps maybe in energy policy. I mean, take a look for our radio audience as we do for some of the winners and some of the losers. It looks similar to yesterday. And Carol, what is at the top of the screen? Energy. That sector is up 2.8%. I was talking with earlier with Paul Sweeney, the capital discipline that these energy companies have. You know how profitable they are, $80 a barrel, but they're rewarding bondholders and shareholders. They're not drilling. And that is pushing some of these stocks higher, of course, as you're really rethinking what capital discipline looks like. Banks, of course, are also higher as well as some of the dividend financials, given the lift up in yields that we've been talking about. Just to the downside, and hate to sound like a broken record, day two, Carol, technology, that is what is red on the screen.
Right, exactly. We've seen that before. I'm going to start, though, with some energy names because you pointed that out as our best performing group in the S&P 500 among those major industry groups. Occidental Petroleum, a lot of the E&P companies, we saw them. Apache also top in the S&P 500, and we saw Oxy up about 6.4% here. And it's interesting to see what we saw in terms of the energy moves. You saw crude oil higher. You saw a lot of these names in the sector higher. And maybe it's a result of, folks, we are still a carbon world. And maybe these companies are going to be out there, certainly with oil still staying at some high prices. They'll be out there drilling and certainly processing these companies. Want to mention Dollar Tree, up 9.2% in today's session. Can you still call it Dollar Tree when you're charging $1.25?
tree.
Exactly. Can you do that? So they're going to start doing that for, or charging a lot of items, $1.25. They're going to start that in April. They say not a reaction to short-term or transitory market conditions, but did acknowledge the inflationary environment and said the price boost will help mitigate historically high costs, including freight, distribution expenses, as well as wage increases. We've heard that from a lot in the retail space. One more name in the retail space, Ross Stores, top in the NASDAQ 100, up 3.8% in today's trade. Strong third quarter earnings, yet some conservative guidance according to analysts, and yet that stock nonetheless, Ed, trading higher today.
Yeah, I'm sticking at decliners and the tail end of earnings season. And Zoom, I know we discussed Zoom 24 hours ago, but look at that drop. Pretty significant, down 15%. At one point, it was down the most on record, but it ended with the biggest drop since August. You know, analysts are kind of disappointed that there's no pipeline of big new customers. We talked about the stickiness of the technology. We're all still using Zoom, but analysts want to see evidence that other big corporates are getting on board for next year, fiscal 22. Best Buy as well, down 12.3%. Carol and I have been discussing this one throughout the show. Theft. Can you believe it? The bottom line hit by theft from their stores. You see, they basically cite organized crime, and the CEO saying, quote, it's traumatic. What they're seeing with that stock. But remember, they have some other problems as well. They sell products that we all bought at the height of the pandemic, and that demand is kind of abating for a little bit. And Peloton, again, I'm sorry to pick on Peloton, but it continues to fall down for a fifth consecutive day. The stock now pretty much at its lowest level since May 2020. And there is data out there suggests going into the holiday season that sales have kind of dropped off. But again, we're talking so much about the reopening trade. Yeah. Peloton is the antithesis of that, right?
We're awaiting some earnings, of course, coming from other retailers out there. We look for Nordstrom, we look for Gap. I look at what's also on the downside in terms of FX. Japanese yen at a 4-year low versus the US dollar. It is a story of dollar strength as we head towards a reassessment of who leads the Federal Reserve. Canadian dollar also gets a bid as WTI crude rises 2.5%. So much for that strategic tapping of the reserves. It was all priced in. Crude oil up 2.5%. $78 is where we trade. Brent crude up 3.5%. $82 where we trade. Some issues with Russia and the US relations there. More sanctions. Natural gas pushes higher as well. And Taylor, yields up across the board.
It is second day really in a row. Bond price lower, yield higher. Taking a look yesterday on the 10-year, you're up 8 basis points. So now you're up an additional 6 basis points. So we bottomed out around a 159. We're back up to 168. And just really a matter of 3 days. Same with the 30-year when you're up about 7-8 basis points as well. I would note, Carol, the 20s, 30s curves is still inverted. Priya Misra of TD Securities talking earlier about the yield curve on 2s, 10s at about a 104. A little bit flatter, I think, than traditionally around this time of the economic cycle, but really perhaps maybe pulling forward some of the rate hike expectations. Caroline, some earnings as well coming out.
Yeah, Nordstrom, of course, a retailer we all know, many getting back into the department stores, and Nordstrom reporting their earnings per share for the third quarter that actually is coming in a little bit lower than the average estimate, 55 cents. It comes in at 39 cents versus 34 cents year on year. So it is an increase year on year, but that perhaps the estimates have got slightly ahead of that. The gross margin coming in at 35.1%. The estimate versus, again, it's an improvement year on year and actually beat the estimates of 34.9%. They're talking about improvement underway in terms of merchandise margin across the company. They're ensuring they have visibility, flexibility. They need to serve their customers seamlessly, they say, despite the global supply chain challenges that the CEO did speak of course, previously back in September, talking about the supply chain issues that they currently had afoot. And we are, though, seeing a significant sell-off after hours. I just want to dig into some of what they're saying in their overall statement, talking about they're on track to meet their fiscal 2021 targets for sales, for earnings, for cash flow overall. They said they see continued strength into pandemic-related categories, particularly home, particularly active, and their designer category performing well, designer shoes, handbags. But remember, they really had to focus on their inventory overall. Going forward, they say they are focusing on their 3 key areas, improving Nordstrom Rack fact that they previously have noted was underperforming where they wanted, increasing profitability, improving that merchandise margin, as I say, and optimizing their supply chain and inventory flow. They say they're confident that the actions they've announced will enable them to successfully address these operating challenges.
Well, they've definitely been struggling this year. The stock's only up about 2% there, and certainly in the retail space, one of the underperformers. Just want to mention HPQ is just crossing as we speak. Let's get to the numbers. Talking about the outlook here, and let me just bring it up here as they run through my terminal really quickly. HPQ, we're seeing fourth quarter EPS of 271. Let me just pull this up. Sorry, it's moving a little bit fast here. Whoa. This is when my terminal's just moving around here.
Currently down by 0.6% overall, and they're seeing a full year 22 free cash flow of at least $4.5 billion. They're seeing fourth quarter net, Carol, $3.1 billion.
Thank you for the assist there. I was just having a little tech problems there. So we are seeing the stock down a little bit, down about 0.6% here. Keep in mind that they've been navigating some tough supply chain conditions, and so we've been concerned about the 2022 forecast. They did lower expectations in their third quarter results, predicted some low single-digit market revenue growth, and we got that at their October Analyst Day. But right now we're seeing that stock, which was down a little bit initially, we're seeing it bump up about 1% here in the after hours. So investors seeming to turn around and warm to the results here.
Also taking a look at shares at VMware as well. Third quarter revenue coming in just a little bit better than expected, $3.19 billion versus estimates of $3.12 billion, and a big improvement on the bottom line. Third quarter adjusted EPS of $1.72. Estimates here were for $1.54. So certainly seen an improvement here, and we've been talking a lot about this, Ed, about some of the security companies who have been keenly able to outperform.
Yeah, look, software play has been really mixed among investors. You know, you're either worried that these are pre-profit companies, they have a long stretched valuation about the rate path that we were talking about, or they found relevancy because cybersecurity, as Caroline and I have talked about on BTEC, has actually been as a group pretty strong this year.
Yeah, we're currently looking, of course, across the board at these earnings coming out. And we want to correct that HP, the numbers are coming through the Dow Jones wire at the moment. That's where the numbers had been.
Right. It was a little odd here in terms of what's coming through, right? And that's why it kind of threw me off a little bit because I was kind of looking for some of our reporting. So are we good with the fourth quarter numbers here, or we're still waiting for some confirmation?
We're waiting for Bloomberg to confirm. We will get that straight away as and when it does indeed break. But across the board, we should return to some of the other retailers that have been reporting. I want to dive back into Nordstrom a little bit because the shares are moving so significantly after hours, and that is after third quarter net sales rose 18%, a beat, but it was the third quarter earnings per share that seems to be upsetting the investor base, down by some 15%. But after an extraordinary day for Best Buy and the like that we're talking about so well, we keep an eye on what happens with Gap a little bit later.
Yeah, really getting killed there, as you mentioned, down 15.5%. We are going to track those HPQ earnings, and as soon as we have confirmation, folks, we're going to bring them to you and track that aftermarket trade. All right, that's going to do it for our cross-platform coverage, our market wrap on this Tuesday, live on radio, TV, and on YouTube. We'll catch you again, same time, same place, tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, you are listening to Bloomberg Business Week, and Carol Masser along with Ed Ludlow. Right now, we do now have some Bloomberg news headlines crossing when it comes to HPQ, and the company talking about its outlook, seeing first quarter adjusted EPS of 99 cents to $1.05 a share. That compares with the estimate of 95 cents. So it looks like they are bumping their outlook as we speak. Also seeing 2022 adjusted EPS, so that's for the full year 2022 outlook. They are seeing it $4.07 to $4.27, so still sticking with that estimate. The street estimate was for $4.06, so that is definitely above what the street consensus. Quick check on the after hours, and we forgive or apologize for some of the confusion because we did only get some headlines that were not Bloomberg News headlines initially, and we just wanted to wait for our Bloomberg News team to confirm them based on those HPQ results. Right now, the stock is up 12% in the after hours, so I'm glad we waited for that. All right, you are listening to Bloomberg Business Week. Carol Masser along with Ed Ludlow. So Ed, let's talk a little bit about HPQ because this is an important one, certainly within the tech sector. This is businesses, certainly the more traditional technology space. We're talking about printers. We're talking about computers used certainly in the commercial space. And this stock, big pop up in the after hours.
Yeah, big pop. And what we were looking for is this ongoing demand, right? That these are companies that are selling into directly consumers and also to businesses. They had elevated demand during the pandemic. Remember, like HP or HP has just not had the strongest story. You know, there's been no romantic story around its technology for a little while, but it found relevancy during the pandemic. And when you come out of the pandemic, the street wants evidence that there's staying power for the brand and that there's still demand from the consumer.
Well, and what's interesting too, and many would say, and analysts will say that, you know, because of the hybrid workforce that we are continuing to see even as we come out of the pandemic, of course, though, there's starts and stops because of the rises in COVID cases, but because of that hybrid nature, that is something that is very favorable to commercial computing, and certainly when it comes to the print space specifically and demand ultimately for HPQ. And we're seeing that play out here. Again, the stock is up about 11% here now in the after hours.
Yeah, it's interesting. I'm just going through the data. There's a lot to take on board. But interestingly, consumer PCs net revenue is down 3%. Commercial PCs net revenue increased 25%. So that's clearly where the demand is coming from here, business to business. And the market definitely likes something. We'll try and get a better steer on what executives are telling their investors when we get with the call.
Well, and that's exactly what analysts were thinking going into it. It was going to be the commercial computing and print space that would be favorable for HPQ, and it looks like it's bearing out. Just looking at our quick story by our team from Ian King and Nico Grant, HP reporting quarterly revenue that exceeded analyst projections, helped by a better supply of components to meet rising corporate demand for its personal computers. So we're seeing that stock up 12% in the after hours. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the closing bell. Just getting numbers out of Gap. Shares plunging right now, down by about 12%. Gap Inc., based in San Francisco, lowering its projection for 2021 sales and profit as supply chain bottlenecks lead to lost sales and higher expenses. Also reporting after the bell, HP Inc. It reported quarterly revenue that exceeded analyst projections, helped by a better supply of components to meet rising corporate demand for its PCs. Shares are surging in extended trading. HP Inc. up after hours by about 11%. Nordstrom reported earnings per share for the third quarter that missed the average analyst estimate. Nordstrom shares plunging now by 20%. Stocks higher today amid gains in cyclicals. Techs tumbled. Yields on 10-year treasuries climbed to a near the one-month high. 10-year yield 1.68%. S&P up 7, a gain of 0.2%. The Dow up 194, up 0.5. Nasdaq down 79, drop there of 0.5%. Spot gold down $14 the ounce at $17.89. Spot at down just about 0.8%. Crude, big story today. We had the big release from the Strategic Petroleum Reserve, but we saw crude oil today up by 2.7%, up 2.04 the barrel, 78.79 for West Texas Intermediate crude. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we're watching shares of HPQ in the after hours. Still quite a rally, up about 10% as we speak. And this is coming, as Charlie mentioned, the company reporting quarterly revenue that exceeded analyst projections, and that was helped out by a better supply of components. They were able to meet rising corporate demand, especially for its personal computers. All right, so let's get to it with Bloomberg Intelligence Senior Technology Analyst Woo Jin Ho joining us on the phone in Princeton, New Jersey. So tell us about the quarter and what stands out for you, and does it make sense to you that the stock is up so much in the after hours?
Hey, Carol, thanks for having me on. So, yeah, solid results. I mean, I think the revenue upside surprise, notwithstanding the revenue upside surprise, is that their ability to still execute despite the supply bottlenecks in the quarter. If we keep in mind, they cut guidance last quarter because of the supply chain bottlenecks, and they were able to right the ship fairly quickly. And it looks like they were able to extend it into the next quarter results, which is a positive indicator of demand. And they raised the full-year guidance, which seems to be conservative, given that they're beating the guidance by about 7%. So, versus a 3% increase for the full year. So the back end seems to be a little bit conservative. That's why I think there's a little bit of enthusiasm into the shares after the results.
It's interesting because they're talking about a better supply of components, but also higher input costs, right? They're saying we've seen costs increase and we've responded to the price increases, and they're managing their profitability well. What was your take on the bottom line?
Sure. On the bottom line, still going through the numbers, but if you look, I'm more focused on the outlook right now. We're still talking about a 7% beat. Here's a couple of things about the passing along the cost to the customers. It's still a double-edged sword because they still have a fair amount of backlog, and that's going to be under the old pricing sheet. With the higher component costs. So, if anything, they'll probably gain on the margin side closer on the back half of this year versus the front half of this year. So, you might have, I think it's more of a top-line beat driving the bottom-line leverage, more so than on the gross margin side for the near-term outlook, which scope for improvement going into the back half of next year.
So, what would be some of the questions you would be putting to HPQ execs at this point?
So I'm looking at the durability in terms of the desktop momentum. They grew 11% on a year-on-year basis, and also with everyone going back to school and going back to work, the notebook numbers were fairly strong. So I don't know how sustainable that may be, growing at 13% on a year-on-year basis. That's one from a revenue basis. On a supply chain basis, I want to know exactly how how they were able to quickly right the ship on the supply chain side to get the components needed to get the revenue to deliver on the upside for the fourth quarter, as well as driving 2022.
That's what's kind of interesting, though, right? Commercial PC sales up 25%, consumer revenue down 3%. So what's happening? Is this that we're all going back to the office, so employers are thinking, right, time for some new laptops, guys, let's go?
Yep, and on the commercial side, that makes a lot of sense. I know that a lot of corporates are still have flexible work environments, and this is probably the best time to install new PC upgrades for the desktops in preparation for all the employees to come in. Now, keep in mind that corporates have been waiting on these desktops for quite some time now, and it's some of that backlog coming in, converting into sales into the quarter. So that commercial order doesn't surprise me at all.
Hey, how much of the investor interest in this company and this name right now is because of the buybacks that we've seen out of the company?
I think a lot of it has to do with the buybacks. I mean, if you look at consensus expectations for fiscal 2022, we're talking about flat year-over-year growth and 10% DPS, and all of that is 12%. All of that is because they're reducing the share count by about 12%, and we're talking about free cash flow of over $4.5 billion for 2022. All of that going back to shareholders. So it's from a capital returns perspective, it's an attractive name.
Very quickly, does HP benefit if there are lockdowns? If we go back into lockdown in the United States, if the European ones continue, would that boost PC sales?
I think that if we look at the lockdowns, I can't predict how the virus is going to react and the extensiveness of the lockdowns. But if the lockdowns are going to be at a shorter period of time, I think that from a planning perspective, corporates are going to continue to look at it from a full year perspective. So if anything, there might be you might have a small bump, but only a temporary bump at all.
All right. Well, unbelievable, like what we're seeing in the stock. I mean, up 30% in the regular trade year to date so far in 2021, and now we're looking at another bump here in the aftermarket. Again, this stock is, I'm just pulling it up here, now up about 6.25%, so kind of tempering some of the initial bump up, but nonetheless something we'll follow into the Wednesday trade. All right, we're going to leave it on that note. Woo Jin Ho, thank you so much, Senior Technology Analyst at Bloomberg Intelligence, joining us on the phone from Bloomberg headquarters in Princeton, New Jersey. Definitely some outperformance there, Ed.
Big outperformance, and also a clear story as well, which investors can understand.
Exactly. All right, you're listening to Bloomberg Business Week. Carol Master along with Ed Ludlow. Coming up, a friend of the show. We'll check in with Kent Swig. He's going to join us in just a moment right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. So excited to have our next guest, and he's in studio. And I don't know if you've talked with Ken Swig. He can talk about so many different things: real estate, politics, what's going on in the economy. He's going to join us in just a moment.
And digital currencies. That's what I'm all about. I want to talk to him about what he's been up to in the world of crypto. And there is a lot to discuss on all those points. So a good guess, Carol.
All right, he's coming up in just a moment. First up, though, let's get back to your top business stories. A slew of earnings news after the close. Here's once again Charlie Phillips.
Hi, thank you very much, Carol Master. Right to the earnings. HP Inc. reporting quarterly revenue that exceeded analyst projections, helped by a better supply of components to meet rising corporate demand for its PCs. Shares surging in extended trading. Right now, HP Inc. up by 6%. Gap, very different story. The retailer lowering its projection for 2021 sales and profit as supply chain bottlenecks lead to lost sales and higher expenses. Gap shares after hours plunging 16%. Nordstrom reporting earnings per share for the third quarter that missed the average analyst estimate. Shares continue to slump after hours. Nordstrom, JWN on the ticker, down now by 22.08%. Higher day for U.S. stocks today. The Dow, the S&P higher. We had NASDAQ declining, mixed session. Technology sector extending losses as rising Treasury yields damp the outlook for growth stocks. 10-year yield 1.67%. S&P up 7, up 0.2%. The Dow up 194, up by 0.6%. NASDAQ down 79, a drop there of 0.5%. So what was on investors' minds today? Megan Horniman is Director of Portfolio Strategy at Verdance Capital Advisors, and she was our guest right here on Bloomberg Business Week.
I think it's going into year end, and what's going to happen with the rally here. That's, I think, one of the biggest concerns for investors, especially since we're starting to see this backup in interest rates, and we have seen that. Historically, when we see these kinds of moves in interest rates, it does challenge the equity market. We're seeing that today with specifically those expensive tech names, as well as seeing the volatility index increase today.
And today we did have the 10-year, as I mentioned, 1.67%. Gold down $14 the ounce. Spot gold at $17.90, a drop of 0.8%. Crude oil, even with the release of oil from the Strategic Petroleum Reserve, jumping 2.2% today. West Texas Intermediate crude up at $78.51 a barrel. Briefly, Walt Disney Company pausing sales of all but one type of annual pass for its Florida theme parks in an effort to manage demand around the holidays. Disney shares down today by 2%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, folks, he was our last in-studio guest back in March of 2020, just before we shut down everything, and the pandemic was really rearing its ugly head. It was Friday the 13th, ominous, March 13th, 2020. He joined us throughout the pandemic. He's now back actually in our Interactive Broker studio here in New York. We welcome back Ken Swig, President of Swig Equities. They are a real estate development and investment firm, and it's so great to have you here with Ed and myself. How are you?
I am doing well, and it is wonderful to be here in person.
I said you walked through the studio, the walls were going to come crumbling down. It's been a long time. What has it been? 20 months. Tell me about, as you look back and you think about kind of where we are today, how the world has changed in that time. What stays with us? What goes away? What goes kind of back to quote unquote normal?
Well, I think one of the biggest changes is to re-experience human contact and to be with people in offices and restaurants and other places. I mean, the idea of isolation, while we started getting used to it for a while, and the minute you get out and into an office and you start seeing people and talking to people and interacting, you realize that we're meant to do that in life, and that this isolation in the house and the homes, while very important for safety purposes, it just doesn't work for humanity. So thankfully that I don't think will stay with us. What will stay with us, I think, is a concern for health and a whole different way about doing things, whether it's cleanliness and washing our hands, to I think wearing masks on planes is going to be
We talked
probably
about that earlier on air.
right, a permanent thing and a good thing. I mean, take a look at a fuselage where you'd think all this would be passed, COVID would be passed back and forth, and yet we've made plane travel safe.
Right.
So it shows that we can overcome that kind of thing, and we just have to be, careful and stick with what works.
Ken, good afternoon. I regret that I can't be there with you in
here.
person. I wish I was there. I mean, it raises a good point, right, that we've spent so long behaving differently, but also where we have been has been different. At home, I actually am glad that I was able to return to the studio in September of last year. But your real mainstay is real estate, right? And what do you see in key markets? Is this just a flood of people rushing out into office spaces, everyone desperate to get the prime locations, or are people still a bit nervous?
I wish it was so. People are nervous, but I think fundamentally we've seen something that is very unique in the marketplace, and that is that people don't want to commute to work anymore. So we actually have a shortage of workers, and people are willing to take a hit on their income just not to commute, not to have to pay for clothing, in effect, not to have to pay for the lunch, and not to have to pay for family care. And that's a massive change. So,
and that stays with us?
I don't think it stayed with us, but I certainly think it's going to be around for a little while until some things start to change. And people are, right now, businesses are allowing that to happen. I think, frankly, that it's not as productive, not as creative, not as opportunistic.
But does it speak to maybe
office.
some big problems in terms of child care? Like, I just think about this has been an issue that it's problematic for lots of individuals.
It is, and being at home, you avoid all that. So I think right now for the Class B office space around, I think that's an impact that's going to happen now. The Class A office space, the big institutions, big corporations, they're there. Their people will be there, and they're getting paid, et cetera. But it's the smaller firms that are having trouble convincing their people to come in.
There's no paring back. Are you seeing any signs? We just got about 45, and then we'll take a break and come back. But are you seeing any paring back by major companies and saying we're not going to take that extra space, or you know what, at the end of this lease, we're done with it?
There was, and I think that's starting to change again. I think people are starting to go out and find office space. They're starting to move. The leasing volume activity finally is keeping up and growing. 2020 was a tough year. Everything froze, right? Like we did. Everything just was stopped in place. Now we're starting to integrate back again.
Yeah, and it's interesting too that, I mean, you and I we've had conversations about, the idea of the city being dead and people not coming back to it, and we're seeing people come back.
Yeah, thankfully. Downtown, not as much. They got to start getting back downtown. The corporations need to start occupying their space again.
Well, that's the financial sector, right?
Yes, absolutely.
All right, we're going to continue with Ken Swig. He's president of Swig Equities. He is here in our Bloomberg Interactive Broker studio on this Tuesday. I'm Carol Massar along with Ed Ludlow. Right now it's off to D.C., 99.1 Newsroom in the nation's capital, and Nancy Lyons. Hey, Nance.
Thanks, Carol. A Virginia jury has awarded millions of dollars in damages against white nationalist leaders for violence that erupted during the 2017 Unite the Right rally in Charlottesville. After a nearly month-long civil trial, a jury deadlocked on 2 federal claims but found the white nationalists were liable on 4 other state counts. The jury awarded slightly more than $25 million to 9 people who suffered physical or emotional injuries during 2 days of demonstrations. President Biden is using the Strategic Petroleum Reserve to increase the supply of oil to American refiners and gas to filling stations. Bloomberg's Irv Chapman has more from Washington.
The president said there's been a spike in gas prices every few years, and he's enlisted other governments in the effort to moderate this one.
Today, I'm announcing the largest ever release from the U.S. Strategic Petroleum Reserve to help provide the supply we need as we recover from this pandemic. I brought together other nations to contribute to the solution. It will take time, but before long, you should see the price of gas drop where you fill up your tank.
The president said electric cars will eventually reduce the need for oil, as well as save drivers hundreds of dollars a year in fuel costs. In Washington, Irv Chapman, Bloomberg Radio.
President Joe Biden and First Lady Jill Biden are traveling to Nantucket on Massachusetts' Cape Cod today to celebrate Thanksgiving on the island as part of their decades-long family tradition. The president last spent the holiday there in 2019 when he was is campaigning for the Democratic nomination for president. Last year, the Bidens spent Thanksgiving at their Delaware home. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Still with us is Kent Swig, president of Swig Equities, joining Ed Ludlow and me. Follows, obviously, very involved in terms of development and investment in real estate. And I said to you in the break before we got going, we're going to talk for a couple of minutes and then we'll come back and talk some more. Commercial real estate, I keep waiting for that reckoning. It's happening on a certain level?
Yeah, as I say, in the Class B space, there is a reckoning right now because it has to do with first of all, a lot of the companies, whether they're public relations firms, advertising firms, some even architecture firms, feel that they don't need as much space as they had before and that they could have people working from home. I happen to think it's not going to last and it doesn't work that well, but certainly for the moment, people are trying to do that. So, and people don't want to, as I said, commute. So as they don't, there's an imbalance right now and there's space that people just don't necessarily need or don't think they need right now.
I wanted to talk to you about New York City because I'm here in London and everything's a little bit cheery, actually. You know, there's beautiful decorations, the bars are packed, you know, the streets are packed. And there's this story from Dow Jones about how New York City hotels really want this kind of amazing holiday season. But the data from CBRE shows that, you know, maybe occupancy will be around 56%. What's your read on New York City right now?
I just got about 30 seconds.
Okay, well, the bars are back, the restaurants are back, sporting events are back, music events are back.
It's busy on the
theaters
streets
are
of
back,
New York.
and it is very, very busy. Hotels went through a whole punishment before this, so they shut down completely, and to reopen and re-engage is a tough thing. We also have certain union rules that you can't partially open, so it's all or nothing. So that's an impact in there. But as travel certainly is booming right now, and New York is a great place to visit. So as the hotels start reemerging and opening back up, I believe we're going to end up, you know, with a big tourist population. But it's going to take a moment in time. You can't just turn the spigot on and fill it up.
We're going to continue with Kent Swig, president of Swig Equities, right here on Bloomberg Business Week. Carol Massar, Ed Ludlow, and you are listening to Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Turned out to be a mixed Tuesday. We had the Dow, the S&P moving higher today. A down day for the NASDAQ Composite Index. A lot of weakness in technology today. NASDAQ dropped 79 points, down 0.5%. NASDAQ 100 Index down 0.45%. S&P, though, higher on the back of gains in cyclicals. Technology extended losses as rising Treasury yields damp the outlook for growth stocks. 10-year yield 1.67% again. NASDAQ down 0.5. S&P up 7 points, up 0.2%. The Dow up 194, up by 0.5%. Spot gold down 0.8%, $17.90 the ounce, down $14. Bitcoin today up 2.5%, 57,703 on Bitcoin. West Texas Intermediate crude up 2.4% today, 78.56 a barrel. Lots of earnings after the bell. Nordstrom down now by 21%. Gap is plunging 16%, heading in the other direction. HP Inc. shares up now by 7.6%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Want to get back to our guest. Still with us is Ken Swig, president at Swig Equities. He's in our Interactive Broker studio. So great to have him in studio, joining Ed Ludlow and myself. So we talked about commercial. We talked about the reckoning. Residential on fire, you said to me.
It is. It's, it was a perfect V, what we've gone through. We went through starting, in March of 2020, and it went straight down. And then starting in about January of this year, it just went straight right back up. And who would have ever thought
landlords were smart and writing leases that were 15 months or 18 months. They were.
Well, they did what they had to do. So
right.
on the rental side, it went down, and particularly in the Midtown West and Midtown East. There were buildings that were 100% occupied for their entire existence that went down to 48, 49% occupancy. Thankfully, those are back. But the residential sales market is on fire. It's setting new records every day in terms of activity. Prices are down, yes, maybe 18% plus or minus.
From pre-pandemic
levels? From pre-pandemic, but the volume of transactions is up so dramatically, which is telling you people aren't buying apartments to collect dust. They're buying them to live in. So that bodes very, very well for New York.
Well, what's happening here, Ken? Is the idea that everyone fled Midtown Manhattan and after 9 months realized they just couldn't live without Manhattan, so everyone is flooding back?
Well, it's interesting.
You're speaking to his heart. Really well done.
I've lived in Murray Hill, by the way. I've lived in Murray Hill for a short period of time, and I'd never do it again. But that's besides the point.
Well, no. So what happened is people were concerned about their health. So New York City is the densest population in the United States with 28,000 people per square mile. San Francisco is next with 17,000. We're 38,000 people per square mile. San Francisco 17,000 people per square mile. So people fled. But interestingly, starting in January, Brooklyn started coming back in the one-bedroom and studios. So January COVID 2021 versus January 2020, no non-COVID, the activity level was 80% higher in January 2021 because all of a sudden people found, for studios and one-bedrooms, people found that the merry-go-round slowed down enough that they can jump on and buy their first home. And Brooklyn wasn't considered as much as a dense city, quote, as New York City, because people think Manhattan is New York City.
Right.
And it boomed over there, and then it started spreading into the 2 bedrooms, 3 bedrooms, and now we find ourselves with one of the most active environments in residential sales that we've seen in 30 years.
You expect it to continue?
Hopefully so.
Hopefully
yes.
so.
I think so. The one good thing about New York City, and different than other cities, is that we're 92% of the people that buy an apartment live in the apartment. In other words, so conversely, only 8% of the market is an investor market. So it's a very stable user market.
One thing I want to ask you about retail, because we certainly saw it just in and around the Bloomberg headquarters. It's pretty remarkable about how much space retailers that had left. And I know there's often some movement to other spaces, but we've seen Banana Republic go away. We've seen Container Store go away.
Right.
We've just seen a lot of movement, a lot of empty space. And we saw it during the pandemic of a lot of stores being shut down. Where are we when it comes to retail, generally speaking?
This is my opinion. I think, the big box users.
Your informed opinion, though. You're somebody who
hopefully
has friends in
Thank
commercial
you.
real estate.
I've got friends in
Or
places.
so I hear.
But what I think is this, is that the big box users certainly are not going to be out and about like they were, and they're not going to be taking space.
Okay.
So they're going to be smaller stores, they're going to be lower prices, and that's going to be a great thing for New York, because we're going to reemerge out of this with more of a Parisian feel, where we have chocolatiers, and we have florist shops, and we have cookie shops, and we have ice cream shops, and all these little shops that couldn't afford to be here and couldn't afford to take huge space. The big users are not going to be here as much. So now we're going to go back to the small mom and pop stores. They're going to be more affordable, and our quality of life is going up. So if you're a landlord and you have a big building and the retail goes down a little bit, yes, it hurts, but it's not so bad.
Right.
If you're totally in retail, you've got a problem. But I think our quality of life is going to be better. The fascinating, wonderful little stores that we all miss are going to be back. So good for us.
It's my favorite part, Ed, or one of my favorite parts of New York. I know you are dying to ask Kent about crypto.
Yeah, let's just do it really quick. I mean, in April, you secured $6 billion worth of gold, right? For what as I understand it, is a physically backed asset coin. Explain the concept to us, and how's it gone?
So it's going very, very well. We'll be filing with the SEC on a voluntary basis in the next couple of days, which is very exciting. We'll be among the first voluntarily crypto filing people, so that's exciting. But basically, it's this: there's 7 properties around the United States in Colorado, Arizona, and Nevada. And those 7 properties have roughly 300 billion of precious metals, and about 100 billion in gold. We've allocated $6 billion to back our coin, which is roughly $2 or so per token. That's out there, and it's very unique. We experienced a tough time with the token when we took it over. We halted trading on an old token, and we're giving out free tokens to anybody who had a legitimate ownership of the old token. They're getting a brand new and free as we speak. We're putting them out. So we're United States based. Our attorneys are United States. Our accountants are United States. The ownership is United States. The gold backing it is in the United States. We're voluntarily filing in the United States. So we're also setting up a complementary investment fund that will be giving out dividends to people. So we're really taking business practices of, if you would, the old world and applying it into the wild, wild west of the cryptocurrency world and blending the two together. And I think that will make a great benefit to our ultimate token holders.
And it sounds like an awful lot of transparency behind it, which was crucial.
Yeah, I think it's crucial. And that's why we're voluntarily filing with the SEC. We don't want to make those decisions.
Where does it all go, Ken? Just got about 30 seconds here in terms of what this means for, who do you anticipate will be tapping into this?
Well, I think the average person who is going to find themselves knowing where a company's located, knowing who the people are behind it, knowing who the professionals are behind it, it's going to be very appealing to those people. And best of all, if you forget things like your password, like all human beings do, we can replace your password just like a bank does.
Yeah.
So this is bringing good business practices into a relatively untamed industry.
All right, well, let us know how it's going, and so great to have you here.
It's wonderful to be here, and thank you. Thank you, Ed, overseas.
Yeah, wish you a great Thanksgiving. Ken
Great
Swig,
conversation.
president of Swig Equities. Coming up next, Sound On with Joe Matthew. Joe, what's on tap?
Kevin Brady, the ranking member on the House Ways and Means Committee, is, of course, from Texas, and he's been calling for more shale drilling for months. His reaction coming up to the president's release from the SPR. We're starting with oil today on Sound On.
All right, so relevant considering what President Biden said earlier. Keep in mind, though, the energy markets, we certainly saw investors moving into it with a lot of energy names, especially in the E&P space, trading higher today. All right, for Ed Ludlow and the whole Bloomberg Business Week team, have a great and safe evening, everyone. I'm Carol Massar. This is Bloomberg.